This used to be called the Midday Madness, formerly known as the Midday Show. Now, learn how to trade. What is up, beautiful people? Welcome to Learn How to Trade, formerly known as Midday. That is your girl, Adara. I am Sharif, and we're going to wait for the chat to populate. Okay, waiting on some people to come in. There we go. Bears versus Bulls. Rich Naples, Raphael, Fat Figga, Bob Dub, baby, Andrew, Roger, John, I can't say that last name, Fonzie, there we go. Now we're getting the litany. My man, Adam DeLuce, wow, Arsenal. We'll get to that one in a little bit, but you can tell if I'm excited what happened yesterday.
Yeah, he was walking in with a spring in his step today.
Oh, yeah.
Such
Many
a good mood.
springs.
Yeah.
Very amped up. Chris J, Candy, Plips, Fonzie, loving it, baby. Success is inevitable. That's a hell of a name. Holly, what's up, Holly? Omar, Bob Curran, Dad Trader, Futures Trader Extraordinaire. All right, guys, let's get to some, housekeeping, we call it here. We are brought to you by Search Trader, account funding of up to $1 million. Keep up to 90% of the profit. Enjoy relaxed trading rules with an 8% max trailing drawdown on all new accounts. Shout out to the folks there at Search Trader, who, by the way, still have this trading contest that they've been doing. There was a November one. They've extended that into December. 100,000 fake smackaroos will get you 1,000 real smackaroos if you win the trading contest. We saw the NOS boss on his and all the smack talking and all the fun that they were doing there. So shout out to them. And if you're interested, give that a look. All right, Adara, we talked about something yesterday in the lesson about fear and greed.
Yes.
We talked about journaling.
Yeah, and you actually took us through your journal, which I really appreciated and I found really helpful. And a big part of what you were kind of taking us through was, not being too hard on yourself, to really, I think, and the best way to kind of keep fear and greed in check, or any emotion while trading, because it is something that's a little bit emotional, is to kind of be able to chart through it and to look through, recognize what you do well and what
right.
you're necessarily maybe need to work on a little bit more. And it's really good for accountability, as you were saying.
Yes,
part of it's accountability, and also growth and understanding your trading style a little bit better, perhaps.
All right, guys, so we're going to talk exclusively today about journaling, how to do it, some strategies. I'll show you some of my stuff, pre-market journaling, after-market journaling. Wayners, he's the assistant manager there at the bridge. He journals like a madman every day. He's told me he's going to send me one of his so we can use as an example. So many reasons a journal and in all different facets really will help you with the psychological part of trading. It'll also help you with the technical part of trading. That's kind of a side effect of it, and we'll get to that one in a sec. But what a day it's been on the market. We're going to review these markets super quick here as we bring in the black charts from the side. Let's have a look at what's moving, guys. Clearly, today, the strong Mag 7 name has to be TSLA. It is very strong. It's not at highs. It's up 2.6%. The highs is 246.20. It's knock on the door, 245 right now. Much stronger than anything else. Most of these names in negative territory or just marginally green. I'm talking about the likes of NVIDIA up 0.17. I'm talking about the likes of Google up 0.15. Then you have some marginally red names like Microsoft and Apple down 0.45 and down 0.37. Some of the great names today, though, that ones that you wouldn't be expecting to be running. Upstart was one that I saw on my list there. Let's have a look at UPST. You saw the Katina man in a firm. Upstart, though, having itself a big boy day up.
It's more than started up there, yeah.
You're killing me, Adara. You're killing me. Up 9.17%, knocking the door of that $37 level, trying to break through there, having trouble at that level, though. We shall see what goes down with UPST, but at an interesting level here, VWAP, trying to hold at that VWAP level. A nice bounce off VWAP earlier on Upstart. But let's get right into the journaling component here, Adara.
Let's do it.
All right, so first and foremost, I'm going to show you the old, it's kind of like a pre-market checklist. Now I was using it more so when I was at home, less so when I was on the floor. When I started getting on the floor, it would be like we would have a morning meeting, and so I would always kind of know what was in play, and then I started using the watch list, and then you're talking to people on the floor. So there wasn't really that sort of screening process that I typically did at home when I was alone, because it was kind of like a group thing. But for all those who are still trading at home, let me show you exactly what I'm talking about. Let's zoom in here on the window. Chilean nightmare if we're able to. All right, so on the top over here goes the date. This is proprietary. I made this on my own. It's not very complicated. There goes the date. Then I put the market conditions. Let me zoom in a little bit here. Yeah. The market conditions. What were the market conditions in the pre-market? And I would write down, specifically, I was looking at the S&P and the NASDAQ, okay? I don't really care about the Dow. You know, I cared less about the Russell and other indexes. So when I'm talking about conditions, for market conditions, I'm talking about S&P 500. Then, as the day went on, if things changed from the pre, I would note that here under the day. And then in the aftermarket, if I stayed that long, I would note what the aftermarket move was. So that was first and foremost. Then, what I would write here, number one, would be the ticker. All right? And then the last would be basically the closing print from the day prior. If you've been watching the midday show, you know how obsessed I am with closing prints, and therefore I would note it over here. And then in the pre-market, I would write the highs and the lows in the pre. So when if I was taking a breakout trade, oftentimes with the small cap gappers, I was really interested in taking a pre-market high break, and that would be of interest to me, and so that I would note it here. And then I had windows. So these windows were specific to my style of trading, okay? I wanted support and resistance windows, much in the way that we talked about when we talked about pivot points on Friday. When you have S1 and S2, the gap between those bad boys, you could call a window. Likewise, with R1 and R2, that could be called a window as well. And so I would earmark certain windows that I wanted to take either a breakout trade on or a dip trade on, and I would note that there. So I would put, like, for example, the window, let me see if I can find something here that would be that in the wild, so to speak. Let's see what Apple is doing. Maybe we can find one here that I can kind of give an example for. AAPL. And let's look at the 15-minute look here on Apple. And then we'll see if there's a window that I can talk about. All right. So, yeah, no, this is not what I'm looking for here. Yeah, that's not going to be what I'm looking for. So I'm not going to bother looking for anything. I'll just explain to you what I was using it for. So if I like the particular, come to the screen. Thank you. If I like the particular support and resistance level and there was a gap between them and I wanted to initiate a long in between somewhere there, I would write out that specific window and I would write why I liked it. And I sometimes I had more than one that I liked. So I gave myself 3. And then I would put where I set the alert so that I would remember. Okay, so if it was a dip trade that I was waiting for, obviously I wouldn't have the alert right at the initiation point. It would be much before that, 15, 20 pennies, whatever, depending on the nature of the stock. And then I would be alerted in time to be able to, switch my screen to that particular equity and be able to monitor it from there. And I would do that for multiple different names. And the bottom right corner here, what I would do is morning movers, all right? So there were, I started out my career trading small cappers. So most of these were small cap gappers that were showing up on my scanner. I would write the ticker down. I would write why they were moving, what the catalyst was. The pre-market prep was more for market conditions. What was moving that day in the market? What was the macro picture? I would document all of that information on a daily basis. And I have like hundreds of these in a binder that I've 3-hole punched. And so that was a very, like rudimentary type of pre-market watch list that I used every day. And if you want, I can put it up online for anybody else to use. But it was super simple for me to kind of gauge what was moving in the day using this kind of system, Adara. Anything to add before
I was going to say, so I like that you have kind of a limited number of stocks. I was going to say, A, would you stick with that? Like, would you only use 4 stocks if you only had 4 spaces? And B, did you find that, I guess, limiting the amount of stocks you're looking at helps you be more focused for your trading day?
Yeah,
do you know what I mean with the 4 morning movers and all of that?
Yeah, so yeah, absolutely. So I had a bunch of different, so I had more than 4. 8 and 3, so I had 11 slots there.
That's a good amount, yeah.
Yeah. Rarely did I fill them all out, though. Rarely. I would always like limit it to like 3 or 4,
Okay.
something in and around that level. But yeah, absolutely. You know, for me, especially with how aggressively small cap gappers move, it was really kind of hard to keep tabs on more than one. But it's just, that was specific to me. It doesn't mean that you can't do it.
No, and I appreciate too that you're mentioning, like, you know,
Yeah.
the type of stock you change is ultimately going to make your journal or your sheet look a little bit different, because especially
course, yeah.
with small caps, you and I always talk about this, generally they're kind of one and done.
Yeah.
You know what I mean?
Yeah,
So
most
it
of the
makes
time.
sense that, especially with small caps, something you'd have to do to reevaluate every day. If you trade like a specific amount of large caps, then maybe your process would be a little bit different, right? Which is, I think, interesting to just kind of food for thought that I just wanted to think about there.
Yes,
and I also think that's why I asked too about the limited number of stocks, is I found when I first started, if I saw news on anything, I would like add it to my little list. And I feel like when you have that many things you're keeping an eye on, you kind of get bogged down.
Yes,
You know what I mean?
I'd have to agree with that.
Yeah, so that's why I wanted to touch base on that,
fair.
because I think it's very interesting.
All right, let's get to it, guys. Trading journals. We're going to talk about what benefits you can get from them and how to structure them. So let's get to it. Trading journals have a lot of benefits, such as giving you the ability to keep track of and monitor your progress, see which of your strategy systems is actually working and have the most amount of success, and also help you determine the areas where you require improvement. And that's what we're really trying to figure out here. So keep track of your trades, show you where you have the most amount of success and where you need work. Trading journals can even be used to test the waters before you dive into unfamiliar markets. And we're talking about, you know, how you can use that when you're paper trading. Here is some information every trading journal could include, and you can, you know, include this or not, or any derivative thereof. Obviously the date, because you'd like to be able to reference the trade with the price action on the chart. So the date goes without saying. The name of the security, obviously, the number of shares and or the total investment, and the total dollar quantum is important because it plays into the psychology of it later. When you have a lot of money on the line, you'd like to be able to know that in the journal because it could affect your psychology. So you should be able to draw possible distinctions between winning trades where you only had a small amount of shares, and then other trades which should have been winning but you took bigger size, and that therefore it negatively affected you in a way, maybe getting out too early, too tight of a stop. So you need to know the quantum, the amount of money that was on the line, so you can basically gauge, you know, how you reacted, how your state of mind was at the time. The description of the trading signals. For example, is it a breakout trade? Is it a dip trade? Do you have any dollar cost averaging levels that you want to get into? The description of the entry and exit signals. So for example, where is your profit taker at? Are there any trailing stops? Why are the trailing stops there? What are they based on? Are they based on technical levels, or are they based on the fact that you don't want to lose money, pardon me. Okay? So the description of the trading signals, the description of the entry and exit signals, and then the stop used and the reason behind using the stops there. Are they based upon exclusively on your risk to reward ratio, or are they based on technical levels, right? When we talked about, for example, the pivot points, your S1 and S2, those would count as technical levels. If you had a low of day or a closing print and you got in above that, and you stopped out there, that would be a technical level. So what are you using? What are you basing your stops upon? And then obviously the total gain the total gain or loss from that particular trade, okay? So anything to add or say before I continue on?
Yeah, I was gonna say, I think too, I like that you're focusing, like, you know, on how you enter and exit, because I know you're talking about earlier, it's really important to kind of recognize the mechanisms you're using to enter a trade. So whether that's like lower highs, higher lows, what have you, whether that's specific price levels, because that's something I put down in my notes as well for today, just because I think, yeah, it's definitely an interesting one. For sure, and it's something I didn't really think about, honestly, until we had the conversation during Risk Management Week, so I think it's good that you're noting that, like, to, you know, kind of make sure about knowing how you get in and out of trades, because I know you said too, it's easier to kind of, you're gonna be more consistent if you do have like a specific strategy you're using for both entry and exit. So yeah, I just thought that was interesting.
All right. Number one, we have 8 points that we need to cover with respect to trading journals. First and foremost, a trading journal helps you ascertain each setup's viability, okay? Every trader has multiple different setups that they utilize depending on the situation. However, What many traders fail to recognize or realize is that they might be better using certain setups than others. And case in point, you know, if I was to do an analysis to see how well I did on small cap gappers, to see what percentage of winning trades I had that were dip trades, and what percentage of winning trades that I had were breakout trades, that would be a very good example of that. So not only are you narrowing down the focus to small cap gappers that are gapping up that day, but you're talking about the type of trade. Did you take it off a support level on a dip trade waiting for a retracement? Or did you wait, for example, the pre-market high to be breached? So that would count as a breakout trade. You want to know what kind of trade it is so that when you go and do the data analysis back when you're reviewing, and we'll talk about that in a minute, you can narrow down the type of trade that it is, okay? For example, some traders are bound to do better in trending markets than in mean reverting markets, while others might have some skills more suitable for markets that are range bound. And we've talked about that. The upward channel, or sorry, the horizontal channel, for example, that isn't a trending market. That is a consolidative market, right? So we talked about during consolidative markets, we don't like to use moving averages. Some people are actually excellent at getting in short at the high of the consolidation level and selling and getting long at the low end of the consolidation level and just doing that to no end, creating zigzags until there's a breakout or breakdown, at which point they cut their trade. So do you do better in a trending market, a mean reverting market, or a range bound market? All right, you need to be able to know that. You're not going to know that unless you're able to analyze your data. Once you have a few months of data, and typically what you want is a minimum of around 3 months of data in your trading journal, you can open it up, take a look at each individual system to see how successful or unsuccessful you've been. So say I go back and I look at my small cap gapper example, and I see that the majority of my dubs on small cappers were all on breakout trades where I took the pre-market breakout. That is data I need to know, right? You may be able to ascertain that just by, you know, your own, inclination every day. You're like, okay, well, I'll just take the pre-market breakout. But if you're taking multiple trades per day over a prolonged period of time, it's going to be harder to keep track of it. Use data analysis tools to help you, and we're going to get to some data analysis tools later, okay? When you see that certain systems are more profitable for you, it is best to employ those systems that are higher frequency so as to obviously return bigger profit. So that is number one. A trading journal helps you ascertain each setup's viability. Yeah. You need to know how each of, number one, you need to be able to isolate each setup to know that this is a breakout trade, no, this is a dip trade. In addition to that, you need to know more nuanced, right? About, like, for example, what time the dip trades seem to work out. And then we'll get to that a little bit later. Okay?
So, yes, so ask a question there. So when you say window on your sheet, that refers to a window of time or window within the stock?
Window with time.
Okay, yeah, so that makes sense.
I've mentioned multiple times that
you don't trade the open, yeah.
Yeah, I don't. But some of these small cap gappers, Adara, they really like the pre-market.
They do.
Because there's no halt parameters in the pre-market. They can run umpteen amount of percent, right? And there's no circuit breaker. There could be a news pending halts in the pre-market, but typically there's no circuit breaker in the pre. So these bad boys, they go 3, 4, 500% sometimes in the pre, and then they retrace in the after the open.
Okay.
So, am I trading a small cap gapper in the pre? Am I waiting for after the bell? Am I waiting for after 10 o'clock? Because there's like this old adage that says dumb money comes in between 9:30 to 10, the smart money comes in after 10 or 10:30, whatever the hell it is. Right, I'm not saying that that's true, and it seems a little mean.
That's just the old saying. Yeah, I mean, it's kind of, yeah.
Yeah, it seems a little mean. Crap stock, do you still fill in that template pre-market open? No, I don't. That was when I was at home. I will make this available some way, somehow. I'll talk to the production team to see if we can make it available on the site or something, so I will have that for you. Moving on, a trading journal can help you work out or work on your weaknesses. Surprise, surprise. Why are we journaling if we're not going to work on a weakness? You're probably thinking. Just because certain systems work for you, that does not mean you should only use those systems and forget about everything else. The fact is that trading systems take a long time to develop. But that said, all trading strategies, sadly, fail eventually. I don't know how I feel about saying all trading strategies fail eventually, but this is what the book says. I'd say the majority of trading strategies are going to fail eventually because they are not conducive to the current market in which they're being used, okay? And therefore, they're going to need to be replaced. Keeping this in mind, it is important that you always strive to find new ones to replace the ones that are failing. And by failing, I mean maybe they're not completely failing in the sense that they're still producing for you, but not nearly how they were producing before. So if you were getting 2-to-1 returns, now you're getting maybe like 1.25 to 1 or something like that. So that's what I'm talking about. When you look for new strategies, you'll find that trading systems can sometimes be quite tricky, even when it comes to easy trading strategies. As such, there is a possibility that you did not understand the system properly or you are not implementing it correctly. And you need to be able to ascertain that. And the data will tell you about that. When it is time to review your trading journal, once again, you can compare the performance of the 2 periods to see if you experienced any improvement.
Okay, that's a good point. So it's really about kind of comparison. And that kind of reminds me, another thing I wanted to ask as well, or at least mention, with regards to, you were saying earlier, like kind of looking at your strategy. So basically it's kind of a matter of comparing to see where you're most successful, and it's something you can't really do unless you kind of look back on the data, right?
Exactly.
It's a little bit harder to reflect while you're doing it.
Absolutely.
Okay,
well, I mean, like the thing is, if you're only taking like 1 trade a day,
yeah, it's a little bit different. Yeah.
And so you've got like 5 trades a week, chances are you're going to know that you're better at breakout than dips.
Yeah, or you know what strategy you're doing.
Oh, yeah. But if you're taking a lot of trades and you're really trying to figure out what works for you, especially if you're in the sim when there isn't as much on the line, and so you're like, hey, let me take this, let me try this strategy, let me see how it goes. You may find that you can't really keep track of it as well, right?
No, that's fair. I took a lot of notes when I first started trading as well. I mean, albeit I'm in the sim, I was in the sim then as well, but I took a lot of notes then so I could kind of get more comfortable, and that's kind of how I realized I do have more of an affinity towards scalping, right? Because you kind of, what I would kind of do is when I was trading in that hour before I started in the midday, when I was starting at 12 or 12:30 in the midday, I would basically do some trades, and I would probably take more trades as well, and I would kind of take notes on everything, and that kind of helped give me a sense of the type of trader that I feel I am. So yeah, I think what I'm trying to say is I feel like it's practical advice. Yeah.
Fair. All right. You can also gather industry-specific data by journaling, and here's what I mean by that. It might turn out that you have a natural aptitude for small cap gappers. You know how much I love those. It could also be that your experience in the car industry makes you better at trading EV stocks than maybe example tech stocks, because you kind of understand what a certain catalyst means. Is it important? Is it a nothing burger? And you know that because you've worked in the car industry and you know when something's important and when it's not. So industry specific knowledge could actually help you become a better trader. Although many traders are able to identify markets in which they have an inherent advantage, a trading journal can make sure that you are aware of where your strengths lie. Remember that you can further break down the area in which you trade securities. For example, you might be extremely knowledgeable when it comes to computers and are thus able to trade stocks of computer manufacturers with ease, but fall short when it comes to cloud companies. Case in point, Dell. Like, for example, if you worked at anything, HP, Dell, whatever, and you have an idea of what kind of catalyst is important to that particular industry, you may not be as well versed in what kind of catalysts are important for cloud-based computing. And so industry-specific knowledge can definitely help you here, guys, okay? Anything to add to that before I go on to the next point? This is point number 4 coming up.
Yeah, I was going to say too, I think, it's interesting to think about the fact that with regards to Catalyst, I think for myself, when I first started, I would kind of think anything that was showing up on the Benzinga scanner was news that could move a stock. And so I would sometimes get into trades that kind of were, to use your term, nothing burgers. There wasn't really anything happening with them too. So I think the more that you familiarize yourself with the market and the more that you look at like catalyst and what's actually moving stocks, I found that to be really helpful. And I think also as I was kind of more cognizant of what catalyst quote unquote mattered, and you're right, like that does, if you specialize in industry, I'm sure that's even easier to do, then you kind of get a better sense of what might move the market. So I think I enjoyed that point. And I think in my experience, I'm trying to get a bit of a better sense of that.
All right. Well, Patrick Langlois feels differently, and you know how we feel about people with different opinions. Very much respect others' opinions, and just because you see things differently doesn't mean that we will not mention your point. And here's what Patrick says. Sharif, I work at Dell. and I probably debate what you just said. Fair, Patrick, man. If you worked at Dell and you don't feel that you have any advantage that helps you trade, for example, computer names like HP, Dell, or anything else. Uh-oh, hold on.
Oh!
Hold on. Come in, Brendo. Oh, can we show them? Of course. Okay, fantastic. All right, guys. Now, in case you're wondering why a pizza is being delivered to our desk here at 11:26 a.m. Eastern Standard Time, it's because our friend, the Neil, he's right there. Bring him in. Bring in our friend, the Neil, over there. Good-looking dude in orange glasses. Fantastic individual.
As you torture him.
And he's eating an apple. I don't know. You need to hold on to your appetite, my friend, because you're about to eat a whole bunch of pineapple.
Appetite.
Right? So Neil, you know, being the brave soul that he is, he took upon himself to issue a challenge that I didn't even know was issued until it was mentioned by the boring man, or so, I think something like that, an individual that wrote on the YouTube channel. He's like, Neil said he would eat pineapple pizza if Sharif didn't mention Lee Otto once on the pod. And I didn't know that he said this. I didn't mention Lee Otto just because I didn't feel like mentioning Lee Otto. I said I talked about BYD. Come back, Neil. I promise you I didn't. I wouldn't lie to you, right? And I didn't. I didn't have this pre-programmed. So Neil lost because I didn't mention Lee Otto. I talked about BYD. I like BYD. You guys know I like BYD. Let's open her up.
It was
baby.
the boring man. The boring man would like to clarify it was him.
There's a lot of pineapple on this pizza, Neil. There's plenty of pineapple. Neil, I think you need to do the honors, my friend. I think Neil needs to do the honors. We're going to take it over. I'm going to have to depart my desk. All right, bring in the two-shot of me and Neil. There we go.
You're taking Sean's place.
I'm in Sean's desk at the moment. Neil, I think you need to grab the biggest one here.
Why do I have to eat the biggest?
I think you need to eat like half of it or something, because like one is just not enough. We need to see more pain. There we go. That's a big boy.
On me right now?
The Chilean nightmare is hiding behind the Neil. That's the Chilean nightmare.
Okay. I'm a man of my. I'm a man of my word. I said I would do it. Now, obviously, anybody that knows anything knows that once you put pineapple on a pizza, it's not even pizza.
Bang.
Okay. That's just step one. Step two, I actually really like pineapple. I love pineapple. It just does not belong on a pizza, and everyone knows exactly what I'm talking about here. I'm not going to add anything to it. The good news is it looks like this is a Hawaiian, so there's like ham on it, at least, which makes it a little bit better than normal. So I will eat my slice.
Which was against the better judgment that I suggested, which was to fill up this bad boy.
The smart move would have been to only have pineapple.
That's what I wanted to do, because I didn't want to give you anything else that you liked, because this is a punishment, Neil, right?
I mean, yes, it's a punishment. So anyways, I'll eat the slice, yada, yada, yada. You guys have fun mocking me, because you should. Like, I made a bet. It wasn't a good bet. I lost the bet. But the good news is...
There's another bet coming up.
Well, the good news is on December 17th,
I knew that was
when
coming.
The Bills walk over your Cowboys,
I knew that was coming.
I'm not going to be even remotely gracious about it.
And I'm going to do what I said I would do.
Not even a little bit. I'm going to be talking so much smack.
I'm not talking smack. I'm giving you a great tasting pizza over here and telling you to take the biggest slice. I think I'm being a good host.
Sharif got out of his seat, walked over here with the pizza, and delivered it personally. Like, he could have stayed in his seat. The pizza could have come here, and I could have eaten it. I'm pretty sure you're gloating right now. It's all good.
Well, a little bit. I'm not gonna lie.
Fine.
Can we see you take a bite?
Okay, let me take the mic.
I got you.
This is ridiculous.
We need to hear like the crunching and everything, Neil. Come on. Honest opinion. No, like honest opinion, for real.
It's actually terrible.
It's terrible, eh?
I think every bite that doesn't have pineapple in it, it's gonna be fine. It actually, like, I'm not saying it makes me sick to my stomach, but it's not a taste.
I can't stop laughing.
Really, you should not put pineapple on pizza. It just does not taste good.
Patty, you want a slice?
No, I'm good.
You sure?
It's a mix of worlds that should not exist. But I'm gonna eat the slice anyway.
Neil is a dang good sport. Throw up ones for my man Neil in the chat, man.
Use the word throw up, please.
Oh yeah, good point. Put ones in the chat for my man Neil. I'm shutting this one off. All right, baby. I'm gonna put this back over here. And we're gonna have some of this because I actually like pineapple on pizza. There you go. The chat is showing you love as well they should, baby. Man of his word, a man of his word. Thank you, Neil. I'll leave this here for you. I know you're gonna want more, right? He's a born-again pineapple pizza lover, so we're gonna leave that for him here because something tells me he's gonna have more than one slice. As I almost killed myself on Sean's chair. Adara, you want to take it over? Adara, you want to take it over?
Oh yeah, sure. Sorry, I missed that. Yeah, so I really excited to talk more about trading journals. But for now, I mean, I can briefly describe the Starbucks long I am in. I'm currently pleased as a pumpkin spice latte, though I may be less pleased if we continue to fail this 9D650 area. I got in on this long because I've been like kind of interested in Starbucks' stock. It had its longest losing streak in history over the last like 11 days, longest losing streak in the stock's history. I was keeping an eye on this one because it's been weak over the past few days, but now, you know, we're a bit stronger on the day, so this is a notable move to the upside for a stock that's been weak recently. Starbucks, which member of Starbucks was it? I would like to, a CEO or CFO, I just want to make sure I'm saying the right person. Starbucks CEO speaking at the Morgan Stanley Retail Consumer Conference yesterday, saying that they do still see some weakness, but the China recovery is normalizing differently and they're working for demand growth. So basically, long story short, I was looking for Starbucks. We are pleased as a pumpkin spice latte at this moment in life. But yeah, so that's kind of my thing here. And I think with regards to like, you know, trading journals, this is not something I planned in advance. So because I didn't plan it in advance, I think it's really like more important to be cognizant of levels. If we make a newer low, I am out. If I see like, you know, this newer low, and when I say newer low, I mean a break below 96, I am outie. Sayonara, goodbye Starbucks. I will not leave a tip for my barista. But if we go higher, if we see like, you know, I'd like to take a beak wetter at this 96.80 because that was where the highest we got in pre-market. I'm a little interested in that level. But yeah, I would first like to see a break above 96.50 and then I can kind of reevaluate my thoughts on this trade. But yeah, just talking through my Starbucks long briefly.
Yeah, nice. Very nice. Actually, that's a hell of a long you got.
Thank you. Right? I got in right at VWAP too because I was noticing we were kept kind of wicking back. So I was like, if I get in this, I think I can get in here. So I did.
That's a beaut.
Thank you.
Good job. All right, guys, let's keep going here. Point number 4 with respect to trading journals. A trading journal helps you set incremental goals. All right, then that's what trading is all about. Unless you're, I keep saying this, but unless you're like super gifted or somehow you figure a way to become profitable right away, which is not the story for 99% of people, you're gonna want to set incremental goals so that you can see your progress in real time. So you can set goals which are marginally better than your previous ones so as not to put unnecessary pressure on yourself while you are still in the learning process. And for me, I know I'm still in the learning process, likewise with Adara, right? A journal is a great way for you to decide what goals you are going to pursue, how you will measure those goals, or how you will measure that progress, example, in terms of a time frame, right? And what you are going to do in order to achieve those goals. And that's easier said than done, but I think the first step here is to articulate what goals you have. And I mean, it could be as simple as, well, I want a lot of money. Well, look, that's probably the final goal. How are you gonna get to all that money? You need to set up milestones and stepping stones along the way in order to achieve that, and that's what you're trying to gauge here. Are you meeting those milestones? Everybody's is gonna be different, and it's gonna really depend on what you're trading. Are you trading tech stocks, small cap gappers, commodities, what have you, crypto, right? I don't wanna leave anybody out there because crypto people are gonna get at me. Number 5, a trading journal holds you accountable. And I gotta tell you, this is probably the reason that I use it the most. It holds me accountable. Because when I reflect at the end of the day about my dumbass mistakes, right, this is where it's gonna make me feel bad. And that's what's gonna put pressure on me not to repeat them. I don't wanna keep writing the fact that I'm an idiot at the end of the day, right? The fact that I FOMO'd into a trade, for example, that's not what I want. I want to write that I had a successful trade. So I'm holding myself accountable, and that puts pressure on me somewhat. So having a trading journal means that you are less likely to make trades that are not part of your trading plan. For most traders, it is the impulsive trade, and this is for me too. It is the impulsive trade that causes them to take a loss. If you have a plan already, right, in the pre-market, I showed you my little sheet there, you're less likely, I'm not saying you're not, you are less likely to deviate from your plan and take those impulsive, boneheaded trades. As such, being able to look back at points in time when you did not stay true to your trading plan and ended up taking a loss will help you the next time you are ready to do the same. You're going to remember that and be like, that's right, I beat myself up for like half an hour after the bell, writing about how dumb I was during the day. Right? Go ahead.
Yeah, I was just gonna say here too, because I'm seeing some of this in the chat, and I agree. I think the other, as you're saying too, like being kind to yourself, as you were saying yesterday, is also
exactly.
We're
important. Gonna get to that.
But I know what you mean too. I think like part of it is accountability, and I think like if you have it written down, then you can kind of, I guess, hopefully be more objective. But I understand what you mean. Like there is like kind of the natural inclination sometimes to be a bit harder on yourself, especially if you're taking L's. But yeah, sorry, I just wanted to like mention that. I apologize for the interruption there.
I thought you were going to say, because you take L's and then you usually come in with your 21
Savage. Oh, my 21 Savage quote. Yeah, I mean, the thing
do
is,
that to us, Adara.
No,
sometimes you say it, sometimes you don't.
Well, the thing is, though, what we're all working towards is, in the words of 121 Savage, taking less L's and making more M's.
I was really rude and didn't offer you a pineapple slice, and people are scolding me now.
Really? Are they?
I can't because I got my Invisalign on, and I don't think the viewers want to see me take my Invisaligns off because that's kind of weird. But would you like me to get you a slice?
Yeah, sure, I'll get a slice.
Okay.
Yeah, thank you.
I'll get you a slice. Go ahead.
Thank you very much. Yeah, so I can kind of, I guess the other thing too with not being hard on yourself is it's much easier said than done. And, as much as we all feel very sad that Sharif was just kind of, a little bit harder on himself there, I think he makes a good point though, is that it's much easier to be hard on yourself. And I do think if you're able to objectively, at least, I kind of said this earlier too, I think if you're able to evaluate why you have these wins and losses, it's a bit more, I would say, objective, a bit more outsider perspective than just being like, thank you very much. Like, oh, this was a rough trade, or, oh, I didn't do this that well. So I think if you are able to actually see, hey, here is my goal going into the trade, I succeeded or I didn't fail on these merits, I think then you're able to evaluate your trade a little bit better if you do have plans there. So I think that's a little bit interesting. And I think, as much as it's sad when we beat ourselves up, I do think that sometimes it comes from not wanting to acknowledge the failures or the mistakes that we made. Also, Raphael coming in here with a comment, your trading journal should also include specific parameters for risk management, such as risk reward for each trade. So I think that's a really good point. Thank you, Raphael here. Also, just a quick update on the Starbucks trade. We have broken 96.50, so I am once again pleased as pumpkin spice, because we're not pleased as punch because we're in Starbucks. We could be pleased as a peach lemonade refresher, but we're pleased as pumpkin spice. There we go.
Dara, you never seem to surprise with how many little quips you have there. You have a lot of quips. I gotta tell you, I like them.
Thank you. I think my brain, I just noticed wordplay and patterns and stuff.
Which is awesome.
Thank you. Appreciate it.
So you're holding yourself accountable. That's point number 5. We got 8 points, guys, so 3 more to go, and then we're gonna talk a little bit about stocks. A trading journal helps you manage risk more efficiently, okay? Many people do not realize that the risk management technique is costing them a lot of money. For example, it is possible that you might have the same risk management strategy for small and large trades. This could, what's going on? So the Katina man is short. The Katina man is short, Mr. Softy, and now he's printing $2 of money. So anybody following along with the Katina man's trade, he is short Microsoft. So for example, it is possible that you might have the same risk management strategy for small and large trades. This could be a terrible idea since you need to be more prudent during larger trades, as they could end up costing you a lot more money, okay? So you need to be able to know whether your risk management strategy is deficient or whether it's sound. A trading journal helps you see where you might be making mistakes with the handling of risk. It could be that you are not taking enough risk to generate substantial reward, or you're setting a stop loss too close and not based on technical levels, or you could have a position that is simply too small to result in any kind of meaningful gain. You need to be able to see all that by reflecting on it. The opposite may also be true. After some time of journaling, you might decide to shrink your position size since you find you cannot cope with wild swings. And I don't think it's a one-off thing. You hear a lot of traders say, look, I'm scaling down my size based on the current market situation that we're in. And then they start scaling up once the market starts, is more conducive to their trading style. And this is something I've seen traders do a lot. Depending whether it's traders on the floor here, whether it's traders that I follow online, they shift or they change their position size based upon the current market conditions. And if you are not reviewing your trades to see, well, am I performing as well during this kind of market as I did during a previous type of market? So for example, we can compare a consolidative market to a trending market, or a down market to an up market. For example, you may be more long biased and are doing better when the market trends up rather than when the market trends down, like myself, that I'm a long biased trader. You need to be able to see all these data points, and the only way you're going to see these data points is if you're including them in your trading journal. Anything to add before I go on there?
I just think it's interesting that you're right. Like we only notice things that we're thinking to notice, right? So like what you were saying, like you're not going to necessarily notice data points unless you have them written down. So I think that's interesting food for thought that I hadn't really considered. Like the idea that you can't reflect on something if you don't know you're doing it, which I think is maybe the key to the trading journal as a whole, but especially with regards to data. If you don't know what data you're using, if you're not planning out your outs, then how can you really evaluate them?
Exactly. And psychology. A trading journal helps you with your trading psychology. And this is kind of the entire theme of the whole week. But we thought, because we talked about trading journals yesterday and we got such, a vociferous response to it, we wanted to be able to talk more about it, even though this week was supposed to be about trading psychology. Many people have mental blocks which do not allow them to take risks. I was one of those people. Remember the conviction thing with the floor manager that I told you guys about? That was one. Remember.
C word.
Yeah, the C word, not the C word you guys are thinking about.
I just think it's so funny that you said that.
Because they went nuts about it when we first said that, right? Remember that in order to make meaningful returns, you need to take a sufficient amount of risk. Emotions in general play a massive part in your trading strategy. We talked about that yesterday about fear and greed, especially if you're a day trader, when there's a lot on the line for shorter periods of time. A trading journal can be a great way to see if you are letting your emotions get the better of you. And like I wrote about that yesterday. Remember when that little piece that I read to you guys about trading QuantumScape and how I lacked patience? That lack of patience came likely because of fear, right? Because the opposite is true. If you let the stock run for a prolonged period of time or longer than you should, it's because of greed. If you're getting out earlier than you really should, it's because of fear. So those are emotions that are wreaking havoc on my trades. I need to be able to journal about them so that I can see them come to the fore. For example, a trading journal can help you see if you ever get angry after a loss and start making trades which do not make any sense so as to recoup your losses. Who's ever revenge traded? Come in, Katina, man. What do you got? He's eating the pineapple pizza. He wants you to watch him eat. How is it, by the way? Because you were talking bad about Domino's earlier. Now, how you feel about that?
I don't know bad about it. It's just not my favorite.
It's not. Yeah, well, I got to agree with you. It's good?
Solid, yeah.
It's done, right? It's done.
There's one more left. You want it?
Ooh, no, thank you. Yeah.
And then here is.
Bring it in, baby.
Well, that's a nice color palette on this one.
Yeah,
I like
the
the cheddar
You got cheese,
triangle.
You got a little bit of ham,
Oh, that's
some
nice.
I mean, they can't
Yeah, they can. They can probably hear you a little bit off my mic.
out here.
It's heavenly. That's what that sound means. It is
The Katina man is going to go enjoy his food, baby.
Yeah,
He's got a pizza in hand and a salad in another. $2.50 now on the softie short. And $1 on the Amazon short. And there goes the dollar.
So some lettuce in addition to that salad and pizza. Or some bread, depending on what euphemism for money you prefer.
All right. No, it's okay.
going.
So we're talking about emotions and trading journal. Emotions in general play a massive part in your trading, especially if you're a day trader. A trading journal can be a great way to see if you are letting your emotions get the better of you. For example, a trading journal can help you see if you ever get angry after a loss and start making trades which do not make any sense to recoup your losses. We call this revenge trading. I have been absolutely guilty of revenge trading in the past. You get out and then you get back in because you're convinced that it's going to bounce off this level, or you take it long and then it flips back down on you, so you take it short again. Rather than actually sticking to the plan, you start deviating from the plan, doing stuff willy-nilly, and that's when the losses start racking up and then they get big, okay? So you're going to be able to see that if you write about it, because trust me, reflecting on it after will help tattoo that in your mind. A trading journal could also help you see if you end up making rash decisions after you have had a run of successful trades and vice versa. All of a sudden, you're flying high. You printed $1 a share, or $2.50 a share on a short on Softy like the Katina man. You're feeling good about yourself, and you punch in double the amount of size at a key support or resistance level once it retraces back to it, thinking it's going to come back down. Don't let the emotions get the best of you. The only way to do that is to journal about them and stick to your plan. Last but not least, unless you have anything to add.
No, I'm just getting into it, yeah.
Last but not least, guys, a trading journal brings consistency. Not only because you are journaling every day, but because you're able to reflect on your data. And if you know what you're doing well with and what you're doing poorly with, you can obviously address that. And that is the road to consistency, okay? Eventually, as you continue to use your trading journal, your bad habits will start to diminish and you will stop losing money foolishly as often. Doesn't mean you're going to weed it out completely. This is because you will be able to see the mistakes that you are making and will make sure to try and avoid making them in the future trading sessions. Certain mistakes are only obvious after you have been using a trading journal for quite some time. You need to collect that data. The aggregate, the sample size has to grow in order for you to be able to get that the accurate data. As such, it is important that you keep an accurate trading journal in which all your trades are accounted for so as to avail the full benefits of it. Look, man, if you're taking trades and you don't have a consistent type of trade that you are taking so that you can go back and say, this trade was successful 47% of the time, while this type of trade was successful 59% of the time. But you know what? That 47% trade all of a sudden jumped to 69 in this type of market. And that 59% trade all of a sudden dropped to 35% in this type of market. You're not going to be able to do all that on the fly unless you're super gifted. Chart and, enter in the data and journal so that you can go back on this stuff later.
You know, I think it's really cool how you and how Obi as well will kind of talk, like, well, everyone too, but especially I know Obi will always talk about charting, which I think is, you know, a different perspective, especially when I first started and I was not as familiar with like the kind of longer term charting moves. But yeah, I think it's kind of made me more aware of the different time frames as well, because that's something I am definitely still working on getting familiar with. That was my issue with yesterday when I got out of that Tesla short. By the way, I am in another one. I am Sim, because some people were mentioning like this is a crazy short. I mean, I am Sim. I have technicals, which I'm not going to get into like right now just because we're talking about this. But basically, yeah, my whole thing too with yesterday is I was only looking at the one time frame. Had I looked at another time frame, I probably would have stayed, right? So I think if you chart in advance with different time frames, it gives you a better sense of longer movements. And then also if you chart, like if you're looking at different time frames while you're in the trade, it can help you kind of adhere more to your plan, to your journal, because you actually are more cognizant if these levels have been decisively broken, or if it's, you know, decisively like what the overall patterns are, right? So I do think the different time frame and the charting element in general is very helpful, especially if you're, you know, we were talking about different ways of framing your points of entry and exit. I like to use higher highs and higher lows, et cetera, right? So I think for that, the different time frames are going to be more helpful. It really does depend too on kind of how you look at trades, what metrics or what indicators you're using for your entrances and exits. All of that is really dependent, and yeah, it definitely keep an eye on things. Also, there was a question earlier, I don't remember who said it just because I saw it briefly in the chat, but I think it would be interesting for discussion. So what happens when you set your stop loss and then you basically get wicked out of a trade? They were saying like if there's something where you set and then it's like a super volatile time of the market like this morning and you just get completely thrown out of the trade.
Yeah, that's
are there any ways to kind of handle that, I guess?
I mean, look, obviously I can't speak to specific situations unless I see it in front of me, but one thing is you can get back in, obviously at that level. Another thing is to really review where your stop was placed. Was it placed at the accurate area? Another thing is to maybe have 2 stop losses. We've talked about that. S1, sorry, yeah, S1, S2 that we talked about when we talked about pivot points. The Katina man, he's the one that suggested that to me. Shout out to him.
That was, yeah.
Yeah, it was fantastic. I'm incorporating them every day. The other, you take out 50% at S1, the other 50% at S2. There's any number of different strategies that you can employ. The point is to be able to journal them and to be able to data collect so that when you go back and you look, you have the accurate data from which to extract information. We're going to talk about some good websites. None of them we're affiliated with. Maybe we will. And after this, they're going to reach out to Cat in the Hat back there and they'll be like, Cat in the Hat, we want to advertise with you, right?
They will say it exactly like that too. This is exactly how they will say it.
Shout out to Cat in the Hat. She's back. Hola. Right? So, hola. There it is.
Like and subscribe today.
Katina, man. Yes. Like and subscribe today. Hit that dang like. Hit that dang subscribe. Or Cat in the Hat's going to be disappointed. Right? Like, subscribe, oh, wow.
That's revenge trading right there.
The Katina man did me dirty. Usually it's the Neil doing me dirty. And the Katina man, he sits back, he's like, look, I'm not involved.
He doesn't take
sides. This is on Neil, right? I'm not involved. And then he's participating in that now. Shout out to him. Yeah, no, for real though. For real. You need to have the data in order to be able to actually make accurate assessments of your entries. And there's so many different data points that some of these websites give you. Anything to add, Adara? Any questions? Because I haven't really been able to look at the chart because I have so much to read.
Yeah, no, I've been glancing here. Pranaya mentioning, do you guys have a journaling or trading review template that you can share with this community? Sharif did mention his earlier, I know.
Pardon me?
The trading journal or
review.
Yes. Yeah. So Sharif was showing his earlier, which is I think really solid. That's like the main kind of thing. I'm going to keep scrolling too if they're seeing anything else.
This is like a poor man's sticky note over here, okay? It's not as nuanced as the sticky note. This is from like a completely different type, right? I have windows, the pre-market indications, what the last closing print was, where my alert is. This is the one that I set up. This is old, guys. This is, I think, from early 2021, maybe mid 2021, in and around that area. I probably should update this. There's just so many different ways that you guys can set this up. Let's look at some questions now. Patrick. I'm going to scroll up. I'm just going to take the ones that I see first. So Patrick, Sharif would like to pick up where we left off before pineapple pizza. It's good to work in tech to know what companies are doing, but it doesn't affect your trading. Examples, where, how, NVIDIA or Amazon. The point that I was trying to make about that, Patrick, is maybe because you worked in the particular industry, you know when a catalyst means bupkis and when it's actually important. And I don't have any examples offhand, but it may be that you know a little bit more about what is more likely to drive a particular innovation than something else. And that's all I really meant about that. Not really trying to say it's going to affect your decision making and your emotions and stuff like that on a day in, day out basis, but it may give you insight into the catalyst.
Yeah.
Okay, Eclipse. I like the way that you wrote that, by the way. I started the sim last Thursday after learning trading on and off for the last couple of years. I'm now on a 5-day green streak, shout out to you, man, and have above 80% plus win rate via scalping. Is this luck or skill? Well, you won't know, my man, until you journal and you have about 3 months worth of data. It looks like you're on a 5-day green streak. Keep going, keep going. Like I talked about yesterday, it's my opinion. It's not something that you have to take as a hard and fast rule. But if you don't prove profitability in the sim, you have no business using real money because it just gets harder. That's just my opinion. You can do as you please, obviously. Amin, Rahman. I use pivot points, Ichimoku, and 200-day EMA to get in and out of trades. So working, and you can hit 10 to 1 if you are patient on trades on higher time frames. Sure, absolutely. Pranaya, Sharif, Adara, do you guys have a journaling and or trade review template that you can share with the community? So I'm gonna give this to the production team, see if we can upload it, but I'm sure you can take a screenshot of this. It's super simple and super easy. This is my old one over here, guys. Yeah, thanks, Ram. This is it over here. I'm sure you can take a screenshot of that, but it's not that great. I gotta tell you the truth. going on here. I'm just trying to find good questions. Scrolling up. All right. Zoned Out says that is, you must have a working system before you even start journaling, a consistent system that you use each day. I would have to agree with that, right? Or, you know, even if you don't have, you know, one system that you work on, you have multiple that you've been taught or that you learned, and you want to see which one you're better at or which one is giving you better profits in the current market, you're going to need a journal. You're going to need to be able to analyze your data in order to be able to ascertain that. So I don't think, you know, you should wait until you feel you have an established system. You should start journaling anyway, and then, you know, as things come along, you'll be able to narrow them down, both in your strategy and in what you enter at in your journal. So that's just a little bit of some talk there. Desmond, Adara, Sharif, could you talk us through how you would analyze MLGO from a technical perspective? Well, I'll have a look at that. Well, you want to look at that, Adele?
Yeah, I'll look at MLGO, microalgo, and I have looked at this one earlier because it was on the watch list, and it was also in the little small cap recap I did earlier today. From a technical perspective, I mean, I'll start with the intraday. So we had this interesting, if we're going to go from pre-market, which I will, because as Sharif was mentioning earlier, there is a greater degree of, I guess, interest for pre-market movement in the small caps sometimes than the larger caps. Not necessarily for levels always, but just kind of because a lot of them tend to have those big run-ups in pre-market. So we had a double bottom sort of situation that ended right about when the market opened at 9:30. Then we shoot to the upside. And then we're kind of in an upward trend. I would venture to say this is an upward channel here, which we know I can't draw these, but we're going to try because that's what we do. So this is how we do it.
How we do when we up in the club. This is how
I don't know this one.
Isn't that G Unit?
I don't know.
Yeah, it's not G Unit. I thought it was them together. It's 50 Cent on his own. G Unit. Yeah, that's what I thought.
I thought it was This Is How We Do It.
We do.
Okay, anyway, sorry, I got distracted by this. But yeah, so this kind of ugly looking trend line I just drew here, this is the upward channel for microalgo. I would argue we are in an upward channel in the intraday.
50 Cent in the game, sorry.
Okay, 50 Cent in the game. There we go. Okay, so that's old school, yeah.
Yeah, it is.
But yeah, so this here is, I would say, basically analyzing this from a technical perspective. We are in an upward channel. Now, how would we break this upward channel? And I mean, this is kind of like a little bit different because I would say the highs are really outpacing the lows here. But if we make a lower low, then we're kind of out of that upward channel, right? So I would definitely draw trend lines, hopefully better than the ones I just drew. I apologize. And then kind of see if we have a break of that trend line. That would be my technical analysis of MLGO. I want to look at the daily too, because I know small cap runners, the longer term matters a little bit less, but I know microalgo, this is not its first time it's run. It has run marathons before in the small cap game. And we have kind of an interesting thing where we have sort of a flat bottom and larger tops, I guess higher tops, which is not really a pattern, but just something interesting to note. The range seems to be getting wider here on the daily chart for microalgo. But yeah, in terms of intraday, I do like that upward trend we're seeing, that upward channel. The fact that we're, you know, basically we are in the midday on a small cap and it's still running like this, to me is very positive because, you know, as Sharif and I were saying, a lot of these like to give up the ghost in the pre-market. Microalgo did not do that. Technically, I enjoy this stock, but I would definitely chart it for yourself.
Here is one that you can use. It's called Trader Sync. We're not affiliated with them yet, but I'm sure after Kat shows them this little segment, they're going to be running over here waiting to get to sponsor us. Step one, you can basically journal your trades, identify your patterns, and boost your performance. This is called Trader Sync. I'm not advocating for this. This is just one of the ones that popped up. There's others. There's TradesViz. There's TradeZella. There's a bunch of these. Some of them are able to connect directly with your brokerage account. Like, so say you're using IBKR or Thinkorswim or what have you, they connect directly there. You log in via API, it extracts your data and regurgitates it back to you in a way that you can use, right? Like I said, I gave you just a couple of examples, the best trades based on time of day, the best trades based on market sector or market cap, what have you. So many, there's umpteen amount of data points that I can give you. but this is what I'm talking about here. You can put pen to paper like I do. We talked about this bad boy over here yesterday.
Yeah.
Here she is. Journal, my trading journal.
Beautiful.
It's old school. It's a legal sized dossier from back in the day.
Dossier, great word.
Or you can, another one here by Matthias Lane is Trade View. That's another one right there. But yeah, that's the whole point of using this kind of stuff, guys, is to be able to get back and to get back the data and to see it in a way that's gonna help you advance. So, yeah, nothing really more to add there. We've gone through the entire thing. We can kind of take some questions now, guys. Put your questions in the chat for Adair and I, and if you even have a question for some others, maybe I can reach out to them and yell back there and be like, hey, Wayners, what do you think about this strategy? Or Katina Man, what do you think about this strategy? The Katina Man, we all know the Katina Man does his sticky note. That's his pre-market trading plan. That's how he approaches the day. Neil is here like at 6 a.m., right? And charting and doing his thing. That's how he approaches the day. Everybody does it a little bit differently, okay? Any thoughts on Bitcoin halving? Yeah, typically my understand from is that you have a nice bull run up into the halving event. So I don't know exactly how long the window is, the preceding 6 months, 4 months, 5 months, whatever it's going to be, there's usually a run up knowing that miners are going to be given half the credits for mining the same amount of Bitcoin. And because of that, there's the principle of scarcity. And that obviously increases the run up in there. But like I've been saying at the big desk for multiple days now, it's not only the halving event here that's really acting as a tailwind, it's a couple of other factors. One, the main one I would say right now is the spot ETF, and we're probably going to see lots of them. Now, the ETF is important because all those fund managers, they're going to have to actually buy Bitcoin in order to include it in their ETF. And there's so many. We know Fidelity, BlackRock, ARK, Grayscale. These are just some of the people who have put in applications, right, for the spot ETF for Bitcoin. And we're probably going to get other ETFs for other cryptocurrencies too, so be on the lookout for that. So there's a spot ETF. The other tailwind is the, belief or perception amongst market participants right now that we are done raising rates. It's just going to be about how long we stay elevated. So if we're done raising, then what's typically looked at as a speculative asset, which is Bitcoin, argue with me about that if you want, I don't care, but it's typically looked at as a speculative asset. These ones continue to run during, when we start talking about rate cuts, when we talk about not raising rates anymore. So three tailwinds, I'd say, maybe even more into that event. Skybear wants you to look at MNDY.
Yeah, I can look at MNDY, and then there were a couple questions here as well about our topic that I would like to answer, or we can talk about later too, but I'll just open MNDY first. Monday.com. Down on the day. On the day, this is looking pretty weak, I have to say. We're looking a skosh flat bottom breakish, though we haven't had that many touches of the bottom. So as we were saying, during chart pattern week, it's generally stronger if we have more touches of the bottom there, right? But if we continue to make a lower high here, I would venture to say that Monday will be giving you the Monday blues a little bit here. Yeah, definitely to the downside here on this intraday chart. I want to look at the daily as well here. Okay, let me zoom out a skosh. Yeah, so we had almost a triple top here on Monday, flew to the downside. We did make a higher low. If we can break up of this high of this 187-ish, I think that would be of note. That would be, a new recent high for this stock. But yeah, we've been in this really, we were kind of in an upward channel for a while there. And then after that triple top, or more or less triple top, we kind of flew to the downside there. Yeah, this is definitely a stock that is taking its time to make up its mind with regards to directions. It appears a skosh confused. But yeah, I think if we do have the higher low, so if we have a higher high here, I think that would be of note on the daily chart. Intraday, like I said, it looks like it might be a flat bottom break. So I would keep an eye and ears peeled for this one intraday. Also, shout out, thank you very much to Rafael Toralvo in the chat. No questions, just gratitude for all the knowledge shared in the show. I mean, thank you very much for the support. I don't know if I have that much knowledge to share, but hopefully, I'm trying to learn a little bit every day, so hopefully other people are learning here as well. Also, Nicholas Long in the chat, I really like this question, and I hope I have an adequate, satisfactory answer to this. Apart from the P&L, how can you tell if you're improving in trading? Well, I think obviously I trade sim and I haven't been trading for that long, so I don't know if my response will necessarily be very apt here, but I think with, what I can say, and with regards to what Sharif has been saying, what we've kind of been saying all day here, is that there is certainly, I find it to be pretty interesting here with regards other than P&L. It's like, are your strategies making sense, right? Like we were saying earlier, a huge part of the journal is making sure that the strategies you are using are, maybe even not just profitable, but sometimes is it the trade that made sense? Or were you acting rationally, or were you being a little bit more rash? Like, were you just jumping in because everybody was, right? So I think with that regard, those kinds of things you can notice with regards to profit or loss, because even sometimes there are times when you'll have a winning trade, but you won't feel that good about it because, and when I say, you, I mean like the general you, just as a general note here, but I think there are times too when you have trades that work out, but you don't feel as good about them because you didn't apply a sound strategy to it, right? And even, we were saying this, I think a couple weeks ago as well, this kind of came up, because I was like, I just feel like I've been making some bad trades, and then Neil said in the comments something to the effect of, there's a difference between a trade that went badly because it went against you and a trade that you just didn't plan. Do you know what I mean? So as long as you plan a trade, you've approached it with, some modicum of planning, of discipline, then I think, to make a long story short, I think to some extent that's also how you can evaluate trades beyond profit and loss. Like, were you rational? Were you of sound mind when you made the trade? To make it a little bit legal in here. But did the trade basically make sense? Did you adhere to your plan? I think that's how you can evaluate your trading strategies regardless of win or loss, because sometimes the trade strategy will be solid and you'll lose, but did you lose more than you needed to because you overstayed your welcome, or did you get out second your stop broke, right? So I think those are some other ways of evaluating your trading strategies beyond profit and loss. I hope I answered your question to some degree, Nicholas. I think it was a really cool question.
Yeah, definitely. I want to look, oh crap, I forgot my headset back there. I probably have to go get it. I wanted to look quickly at the NQ. Interesting look here on the NQ. Look at this lower high, lower low, rejecting off VWAP. So we have a downward trend channel on the NQ, and so we got clear support and resistance levels with which to work. It was a very similar look like we had yesterday when we had these lower lows and lower highs, much in the same look. Look at this, where we move up in the pre. This is 2 days in a row when we've had this kind of action. We move up aggressively, we sell after the pre, then we start making lower highs and lower lows. Same kind of look. Except this time VWAP seems to be the resistance point, whereas yesterday it was more like yesterday's closing print at 15.9. That was the resistance level. So interesting look here on the future as we broke through that 15.9 area, and we're doing that dance right now just a smidge above 15.9. But we'll have to see how this one ends up panning out. I'm just going to send it back to you real quick, Adair. I have to go get my headset.
Yeah, for sure. So yeah, I mean, I can actually, briefly discuss my little Starbucks trade, because we did take a beak wetter, a profit taker, what have you. I said I was interested in this 96.80 because that was where we had that pre-market high-ish, where we kind of swooped to the downside in the first place. I did take my little profits. I dipped my beak into the pond there, right at that 96.80. I still have half my shares in, not a huge share size to begin with, so we're kind of chilling. I will be careful though. If I see what looks like a double top forming, then I may have to make my exunt. But yeah, I mean, if we break 97, I would be extremely happy. Please just pumpkin spice or a peach lemonade refresher. But yeah, either way, I like this trade. I'm really happy with this trade, and I'm, I will admit it was a bit hastier. Like I said, I kind of saw it and got in, but I did still have my outs planned and my profit takers planned. But yeah, I mean, we could argue that this was an example of a trade that I perhaps should have journaled before dipping my head in. So I'm not really sure how to feel about that, but I am happy it's going well. And I did have some, modicum of profit taking planned.
Modicum?
Thank you. I love that word.
So do I. I actually love it too.
But yeah, and then also, yeah, I mean, the other thing too is we did have that Tesla short earlier today. And this is an example, yeah, I got out where I said we made a new high, I got out. But yeah, this is a little unfortunate. But I mean, because I got out where I wanted to, I can't even be that upset. You know what I mean? Like, I didn't lose too much. It was a pretty small share size. I think I went in with like the smallest amount possible. So yeah, there we go. That's some trades this morning reflected on with our trading psychology knowledge.
Great question here from Crapstock. Hell of a name, by the way. Great question. It says, when you trade large caps, surely you don't trade news catalysts all of those times, but rather key major levels. Well, why not both, my friend? Why one to the exclusion of the other? I mean, we get a nice news catalyst on NVIDIA, right? And we see it running up. It then sells off at the open, comes down to a key support level that we've earmarked, whether it was a closing print, something on the daily that we saw, something on the hourly that we saw, and we take a dip trade off there. We're focusing on NVIDIA. I'm just giving you a random example. Because of the news catalyst today, case in point, they're coming out with 3 new GPUs specifically made for the Chinese market after the 2 ones that they previously made were included in the embargo. And then the market starts running up. You take a dip trade off NVIDIA, that 465, I believe, was the closing print. I'm just giving you a random level off which you could take it. And, you know, it runs up. In this particular case, look what it did. It sold the news. So it was a sell the news type event. NVIDIA started tanking down. This white horizontal line is the closing print, okay? You know that I always chart that. Look what the closing print did. Clearly, initially acted as a level of support. All the wicks bounced off yesterday's closing price, and then you gave up the ghost, and then guess what? Support started acting as resistance. Surprise, surprise. All these candles over here are closing below, all the closing prints below that particular level. So I'm not saying this is the perfect case to use, but that's what I'm trying to tell you. We had a catalyst for the name, and then we have key levels off which we want to work. So you don't necessarily need to use one at the exclusion of the other. I hope that helps, my friend Crapstock. That's a hell of a name. I'm still very enthralled with that name. Let's see here what everybody else is asking. Somebody's asking Sean something over here. Sean, if Softy is number 1 and 1 share traded, how much of a gain have you seen on Microsoft during the trading day? Okay, we don't talk P&L. It's $50, like $50 or something, yeah. Havana Woody, CYTO is back into that zone you liked last week. When you looked at it, for me, I went long at 30. Let me look, have a look at CYTO. CYTO, it's been a minute since I looked at this bad boy. It's going to take a minute to load here, sorry.
I feel like this one comes up every once in a while, too.
Yeah, it does. Give this one a second to load. For some reason, some of these stocks, they take a bit to load. Okay, all right, CYTO, obviously, this ran aggressively at the end of November. Oh, goodness. Jumping from, I think it was sub $1, it was hanging around 35 pennies, got down to about 20 pennies or so, held 20 pennies, and then tried to break through that $1 level to no avail, though. And then it was almost like a V-shaped recovery. It's made a higher base than its previous base. So I don't really have much to say on CYTO except that yesterday's bull flag continuation looks pretty good. So there you got the big move up. Then you have a bit of a pennant over here, and then it continues afterwards. But too much noise, and quite frankly, I'm not too adept at these sub $1 stocks. But Altamira Therapeutics, $3.9 million market cap. The trading float on this is 8.77 million, which is quite small. So be looking for some squeezing there if I were you. All right. Any other questions related to journaling, guys? It's about a quarter after the hour. Yep. And then we're gonna have to restart. So I'll send it to you.
Yeah.
And then we can talk about the journaling again. I'm still waiting. Ah, there we go. Wayne just sent me his journal.
Awesome.
So I'm gonna have a look at that, and then we're gonna look at that live.
So we're getting restarted right now.
Yeah.
Okay, perfect. Just one question, really important question here in the chat to address. What's the difference between a smidge and a skosh? I think it's really, it is your own take, right? I think there's no scientific definition, at least for myself. But yeah, I mean, I just saw that and I was like, we have to address this. But here we go. So time for the trading journals once again. So yeah, we were talking about this a little bit yesterday too, because they are a big part of trading psychology with regards to evaluating your trades, but also evaluating your mindset while you're in a trade, which I think is really important, because there is a mental component to trading that is really difficult to kind of extricate from your trading, right? And I know obviously it's a little bit different for me talking about this because I am trading sim, so I don't have that live market experience, but I think still it's important, to recognize, especially for people who are trading, who aren't trading sim, there is obviously a mental component, and trading journals can kind of help you analyze your the moves that you're making in trading and make hopefully better trades. And they can actually be used to test the waters before you dive into an unfamiliar market, because you have everything planned out. So some information about every trade that you include in your trading journal: date, the name of the security or the asset, the number of shares, the total investment. If you're doing this before you enter, like you could maybe be, this is the max amount that I want to enter with, or if you're doing it, after, this is how much I did enter with. The number, the description of the trading signal. So for example, did you enter because you were seeing lower highs? Were you entering on a fundamental reason? Was there something that happened in the company, a catalyst that made you want to enter? Was there a chart pattern, et cetera, et cetera? And describe the entry and exit signals, right? So we made a lower low, so I got in a short, something like that, right? And again, this is going to be different for each person. Stops used and reasoning behind them. So why did I get out here? Was it because an indicator movement, the EMA crossed over the SMA, anything like that? And then also the total gain or loss from the trade. So that's just basically P&L here. And so why are trading journals helpful? So they can help you ascertain each setup's viability. So each trader has multiple different setups they can use depending on the situation, and different traders have different setups they prefer, right? It also depends on what stock you're trading. As we were kind of mentioning earlier, you were talking about the small caps, right? So it's all a little bit different. But what many traders fail to realize is that you actually might be better at certain setups than others. You might be more adept, for example, at scalping, or entering something. We see a flat bottom break, that might be your strategy. Someone else's strategy will be different. So I think you can kind of help recognize what your niche is, what you are best at and more comfortable with, if you're actually journaling, hey, this is where I got in and why, stuff like that. And so some traders, for example, are bound to do better in trending markets than in mean reverting markets, while others might have more skills for markets that are range bound. And once you have a few months of data, ideally about 3 months of data, in your trading journal, you can open it and take a look at each individual system and kind of compare them, oh, I'm best at range trading, or, I'm a little bit bad at range trading. Maybe I'm better at scalping, or sorry, I'm at trending markets, right? And when you see that certain systems are more profitable, you can actually employ those systems at a higher frequency to turn a bigger profit. And it's easier to evaluate the success of these systems if you're actually looking back at hard, cold data that you've collected, right? So it all kind of goes back to, not only accountability, but actually having the data and the stats in front of you and knowing, hey, this is my niche, this is my bag, this is what I'm better at. A trading journal can also help you work on your weaknesses, right? So just because certain systems work for you doesn't mean that you should only use those systems and forget about everything else, right? That's impossible. The market is a wild creature.
Bang.
And she will do different things every day. And the fact that trading systems they do take a while to develop, right? But all trading strategies do fail eventually, and they need to be replaced. So with this in mind, it's important that you always try to find new strategies to replace failing strategies. But how do you know? How are you going to evaluate them? With the trading journal. So when you're looking for new strategies, you'll find that trading system can sometimes be really tricky, even when it comes to easy strategies. So there's a possibility maybe you didn't understand it right. Maybe you didn't implement it correctly. Maybe the market was not as such that the trading strategy does make sense. So here actually is an example for trading journals here.
So Wainers was nice enough. He's the assistant manager on the floor, by the way, guys. He journals every day, and his journals are very thorough. The way I knew is because I used to sit beside him right behind me here when he first started back in the day. And I went up to him this morning. I'm like, Wayne, are you still journaling in the same way that you were before? He's like, oh, even more thorough now. So let's have a look at what he's doing. So here's a December 5th, 2023 entry. It's for Amazon. Right away, you'll see that he's got the chart on AMZ, and he's removed some stuff, by the way, guys, okay? So it's not complete because there's some stuff proprietary to him. There's some P&L stuff there that is, that's confidential to him. So he's taking out some stuff, but he's left the crux of it in there. Right below the chart, look at that. Oops, sorry, this thing's moving too aggressive. trade idea, gap fill, right? We talked about dip trades, breakout trades, range trades, anything. You know, this one was a gap fill. So he knew what he was going for right there. He charted, he liked the gap between yesterday's price action and the current price, and that was the move here he wanted to go for. Look what he writes. Underlying already showing strength versus the market. And which market specifically? He's talking about the NQ. Form a nice breakout pattern just below the breakout level. Started a starting position around 75 cents or 75 S as a higher low pattern forms. You guys know how much I love higher highs and higher lows. Using this to help me leverage on the breakout. You see how he's articulating the idea, and everything is nuanced? Everything is pre-written, it's predetermined. Nothing is being done on a whim here.
Them too. That's really cool.
Yeah.
Okay, I like
let's
this.
keep going on here. Added full size on the 146, used a time stop as it was getting choppy off of the JOLTS number. So in this particular case, he chose not to use a specific stop loss level based on support or resistance, whether he was going long or short. Rather here, he was taking into account the fact that we got JOLTS and that there was likely going to be market volatility. As such, he used a duration stop, not a level stop. Anything, as long as you can create consistency and profits, it doesn't really matter how you're doing it, okay? Added full size on the 146, use the time stop. Okay, I already read that, sorry. As NQ and ES hold highs, it gave me confidence in the trade and liked for first exits around 40s. I love how nuanced this is. It's so detailed. Can argue, oh, I left money on the table, but my target for this trade was 147, and I'm very content with what I did on this ticker. Man, Wainers, we're gonna smash the banks for you. Look at that. And the man grades himself. And I love that. Yes, the Ram's laughing. No, but it's legit. Like, this is like legit. I mean, yes, he gave himself a grade of A here, but I'm willing to bet you if I went and I looked at some of his trades, he would have given himself a bad grade on some trades, and that all of us do that. But the fact that he had the cojones to put in a grade entry there so that he can grade himself, I love it. Second trade there, Robinhood. First of all, there's the ticker. There's a ticker, and then there is the chart, so we know exactly what we're looking for here, and then below it is the notes. Looking for 10 EDB on small catalyst. I'm not sure exactly what EDB means here. Took the stop at $9.65. Maybe can get better, but right now, not going to try and optimize this. I'll accept the L and move on. Grade B. Happy with myself, to be honest. Didn't retry on things not in setup. Look, see that? By journaling and by making a structured plan, it prevents him from being more impulsive and willy-nilly, and that's how the L's, a small L turns into a big or medium L, and a medium L turns into a big L, okay? Happy with myself, to be honest. Didn't try on things not in the setup. Allocated 20% return on this trade. Took that L and moved on. But last but not least, have a look here at how he did with his Uber trade. Again, we got the ticker, and then we got the chart right under that, and then here we got the deets. Tried breakout. Again, now he's talking about the actual trade. Breakout, gap fill, dip trade, range trade, what the hell is it? Tried breakout, stopped, flipped short, stopped, plus reverse long again. Now he's going to give himself, I bet you he's going to critique himself here. Honestly, this is some unprofessional trading. Ooh. I love it. See how he's being honest with himself? Yeah. You know, he's got to be kind to himself here, but he's being honest with himself. If I like the long, why flip short? Question mark. There was size chasing on the bid the whole time through until like 59.30. I don't mind the first long, but short was uncalled for in my opinion. In what I love this is hilarious. Wainers, in what world do I think okay, I have to take that out. Wayne, you can't put that in there. He put the F word. It's all good. Oh, you can't? That's probably good. No, it's a bad word.
Neil's like, I need to see this for myself.
The Neil is coming over here and he's on the warpath, it looks like. Yeah. In what world do I think I am the... Okay, in what world do I think I am the F trading god and think if I'm wrong, the market is wrong and I'm a short? And then he uses a word we're not going to use. Also added to a loser, bad process, grade C. Okay? He's honest with himself here, maybe a little bit harsh on himself, beating himself up. That's fine, that's his method. I know he's tough on himself, but this is fantastic. And then, Ram, don't bring it in yet until I hide some of the bad words over here. Okay? All right, here we go. And then summary, here you go, Ram. Very happy with my day, was disciplined besides my Uber trade, traded my setup on everything else with appropriate risk management plus sizing. Can work on a bit of runner management, but currently really not my focus right now. I love this. I think that this is one of the best journals I've ever seen. He's so honest with himself. He's real. He's positive where he can be positive. When he made a good trade, he patted himself on the back. When he made a bad trade, he articulated why and like, you know, kind of used a couple of words, but that's fine. We love Wainers the way he is.
I was going to say what I love too is that he gives himself a B on the Google trade, even though he admits it didn't go and he did, you know, technically lose. But I like that he gives himself a B because he stayed disciplined. And I think that's an example of, you know, I believe it was Nicholas's question earlier. Yep. How do you evaluate your trades regardless or beyond profit and losses? I think stuff like that. I think that's a really good example, like giving yourself a B on a trade that you lost because you stayed disciplined and you stayed true to your principles. So I love that example. I think the whole journal is really solid, but that stuck out to me because I think that's really important that he acknowledged, like, hey, you know, not necessarily like my best trade of all time, but the fact that I did stick to my scruples and I was scrupulous and I was disciplined, I really enjoyed. So I thought that was I thought that was fantastic. It makes me want to start journaling because I feel like I learned a lot about his trading process just through hearing this, right? So I mean, as applied to your own trading processes, I think could be really powerful. Yeah.
Sorry to interrupt you. You had more to talk about there, but I thought
that was kind of
really
mostly what I had to say.
Yeah, showing this.
Is power. Yeah. And I mean, I think that's an example too. Like we were on trading journals can help you work on your weaknesses. I think that's a really apt example, right? Like Wayne there was looking at his weaknesses, but also evaluating where strengths were too, right? So it's like, you know, not being too hard on yourself, but definitely still being honest and accountable was a word we keep using this week because I think it's really valid. And then so once it's time to review your trading journal, you can compare your performances if you're doing, you know, a couple different periods to see if you experienced any improvement. And that's what I think too, the fact that he had really specific notes here, I liked as well, because then you can actually look at your mindset too, right? Regardless of the cold hard data, you can also look at how you were feeling and how it impacted you when you exit, you know, when you enter the trade. You gather industry-specific data is another aspect of trade journaling. So it might turn out that you have a natural aptitude for small cap gappers, as I know Sharif does. You started with small caps, right? It could also be that your experience in, for example, the car industry makes you better at EV stocks than tech stocks, although as we discussed in the chat, not always the case, right? It really depends on the person. Many traders are able to identify markets in which they have an inherent advantage, but a trading journal can actually make sure that you're aware of where your strengths lie. So if you realize like, oh my God, like, you know, today I traded NEO, and yesterday I traded XPeng, maybe you're really good at Chinese EVs, or maybe you're good at EVs in general, right? But maybe you're not gonna realize that until you actually look at the journal and you realize, hey, this is where I'm seeing a lot of consistency. Consistency is the name of the game here. And remember that you can actually further break down the area in which you trade securities. So for example, you might be super knowledgeable when it comes to computers, so you're able to manufacture like chips or computer manufacturing stocks, but you fall short when it comes to cloud-based companies. So technically, like, you know, computer companies and cloud companies are both within that tech sphere, but they're going to be different, right? So basically what we're trying to say here is you could be even more specialized in stocks than you realize. You could have like a teeny tiny hyper specific niche. And how would you know that? If you weren't writing down every stock and every trade you're taking, right? But a trading journal also helps you to set incremental goals. So a little bit more concrete than the kind of more abstract discussion we're just having there. So you can basically set up goals that are marginally better than your previous ones. So you don't put too much pressure on yourself because, you know, it's very easy to be hard on yourself while trading. While you're still in the learning process. And a journal is a really good way for you to decide what goals you're going to pursue, how you're going to measure your process, so your time frame there, and what you're going to do in order to achieve your goals. A trading journal will also hold you accountable. I keep using this word, but it keeps being relevant. And it basically means that you are less likely to make impulsive trades that are not part of your trading plan. And for most traders, it's the impulsive trades that cause them to take a loss. So if you don't do your planning out ahead of time, sometimes you need to check yourself before you wreck yourself.
Can I answer
Yeah,
one
sorry,
quick
go
question?
ahead. Yeah, absolutely.
So Michael Westrick brings up a good point. And again, we really want to address the opposite or countervailing opinions or perspectives, because that's how we engage in meaningful dialogue, okay? Michael writes, journaling for swing trades, maybe. Journaling for scalping seems pointless in my opinion. I respectfully disagree, while I do respect your opinion. If you don't have this setup in mind, like just because you're scalping doesn't mean that your level shouldn't be identified. The type of trade that you take, like we talked about here, gap fill, dip trades, breakout trades, shouldn't be identified. Doesn't mean that your levels shouldn't be identified. Doesn't mean that the market conditions shouldn't be identified. So if you don't have a trading plan, number one, that is a problem. Number two, if you're not reflecting on the trade itself, scalping, swinging, whatever or otherwise, you're not able to really reflect on what you did positively and what you did negatively. So in my opinion, what I submit to you is that the type of trade is completely irrelevant. Completely irrelevant to whether you have to journal or not. I mean, just because it's a scalp, it doesn't mean that it's not an important trade. What if you're scalping with 5,000 shares? And lots of the guys on this floor, they got that kind of BP, right?
Ooh.
Like say buy 5,000 shares of I was told crazy stories about additions and subtractions to the S&P. Brenda was telling me, well, I'm not gonna go through it, but there was and you know what ton of shares in that particular trade, and it had the floor manager sweating. And it was all to take what? Like a couple of pennies, like 15 pennies on the move. So I think it's not relevant what type of trade it is. What is relevant is that you have accurate data and that you reflect on the right things. So sorry, I just wanted to make.
I was going to say too, with regards to, and I mean, keep in mind with me, I am obviously A, very new, and B, in the sim, so it's a bit different. But I think for myself with scalping, the one thing I think is sometimes different is I like to usually scalp within ranges. So you might not get your levels until later in the day, but I still think, there's benefit from obviously planning, right? And I find sometimes, that's why I said I think I prefer scalping sometimes, because I find I have to plan the levels a little bit harder, or I guess more intensely. So just get some food for thought there. I just wanted to put that kind of out there. Although obviously maybe take that as you will, because I am A, new, and B, in sim. So yeah, so there you go. And yeah, so if you do have your plan, you're able to hold yourself accountable, because you can actually look. Like for example, Wayne's example was a really good taste of that. Like for example, even in that losing Google trade, he could still be like, oh, but I stayed to my plan, right? Or when there are times he wasn't staying to his plan, he was a bit harder on himself, right? And I mean, obviously, like we're saying, try to be easy on yourself too, but I think that's a good example just of accountability in the wild. And yeah, so it really is helpful, especially if you go to take a loss. It's kind of effective to see, did I adhere to my principles when I did this, right? But also it helps you manage risk a little bit more efficiently when you have a trading journal, right? So a lot of people don't realize that their risk management technique is perhaps lacking, or that it's costing them money. So for example, you could realize you might have some of the same risk management strategies for both large and small trades. And as we were talking about in Risk Management Week, it's often beneficial to adapt your risk management strategy depending on the kind of trade you're taking, right? So maybe that's something you notice. You're like, oh, I did this at the same time, but like this, my risk to reward is a little on its head there when I did that. You know what I mean? You can kind of look back and reflect and actually use data points that you're collecting here through your trade journal to think about this, right? And a trading journal can help you see where you might be making mistakes with the handling of risk. It could be that you're just not taking a big enough risk for a substantial reward, which is something I did a lot earlier, and definitely still do, because you're setting your stop too close to the current price, or that you could have a position that's too small to ever result in any kind of meaningful gain. But the opposite might also be true. And after some time of journalizing.
Journalizing?
Yeah, I literally almost said
journalizing.
I think I almost said journalisming. So either way, I'm not going to give myself any credit, but journaling is the word for which we are searching, and we found it. Thank you.
Gotcha.
But yeah, you might decide to shrink your position size if you can't cope with the crazy market movement. You might take other risk management steps, but you wouldn't be able to do that if you didn't have it all written down.
Dang.
So a trading journal also helps with the psychology of trading, which name of the game this week, quite literally. Many people have mental blocks that don't allow them to take risks. And so remember, in order to make meaningful returns, you have to take a sufficient amount of risk. Emotions do play a huge part in trading. As we were saying, there are ways to kind of manage it, but it's always going to be, like, we're not robots. It's always going to be a little bit in the way, right? And a trading journal can actually help to see if you're letting your emotions get the benefit from you or get the better of you. Are you benefiting from your emotional control, or is it benefiting from you? I'll say that. So basically, a trading journal can help you see if you get angry after a loss and start revenge trading, which we do not want in our lives. And then you try to, take these really rash tradings. And also revenge trading is detrimental because it's also off your plan, right? So all of this, basically everything in trading journaling comes back to the same thing, right? Which is making sure we stick to a plan and you're accountable to yourself. And a trading journal can help you see if you end up making rash decisions after you've had a successful run of trades or vice versa. And also, last but not least, consistency. Consistency. The other C word, in addition to conviction. So basically, eventually, as you continue to use your trading journal, your bad habits could hopefully start to diminish because you're more cognizant of them. You're reflecting on them. You're trying to learn from them. And this will be because you're able to see the mistakes that you are making. You're going to try to avoid them. And certain mistakes are really going to be obvious only once you've started taking note of them. So that is trading journals.
That was
Thank
excellent. All right, guys, a couple of things. Let's talk about some of the movers here. We buy global halted $9.80 up 64%. This one just really got going here. I'm keeping my eye on this one. WBUY, Neil. Nice big move up there. A lot of volume. Let me show you guys real quick here. I'm also involved right now in Sarah. I'm looking for a hold at 7 and a dip trade. I'll add at VWAP. That is a planned trade. Okay. This is where I like the dip trade around first entry here at 7 to see if 7 holds, and then I'm going to be looking for in Sarah. I like it. Is that good or bad? Neil says storms are brewing.
I love
in that
the
trade,
draw. I love the intensity with.
Oh, I missed the reference.
I just thought it was foreboding.
No. He meant something, and I didn't get it. Oh, dang it. I usually get that kind of stuff. It's all good. All right, so SERA interests me, as well as WBUY. Let's have a look at the WBUY. This is the 10-minute look, and look at that whaboom. Whaboom, there you go. The Katina man likes that. And look at that flat top break through $8. Adara, what do you see here? Okay, so first of all, what do the lows look like here, and what does the top look like? Forget about this big candle here.
Is it a flag or no?
Well, look, this is an $8 level.
Okay.
So we had one rejection off 8, another rejection off 8.
Okay, so this is we broke resistance.
Yes, and then what happened with the lows over here? So we had the initial low, 565. Then we troughed out at 623.
So we're having higher lows.
And so what kind of pattern is that?
We
have higher lows and a flat top.
That would be an ascending wedge. And it actually showed up.
And it broke through the top.
Yeah, that's what I was. That's what I was looking for.
It's a nice look right there.
Yeah,
so
it's
we'll
really
see
nice.
How that one ends up going. It's halted at 980, guys. 980. This one rocketed up quickly. I'll give you some details about WBY. 16.25 million share float. The market cap 513 million. Is there a catalyst? One moment, please. Here it is, coming by way of Benzinga. We Buy Global shares are trading higher after the company announced it entered into a non-binding, I don't know what the hell MOU is, Memorandum of Understanding, I think that's what it is, to acquire controlling interest in PT Tigasaki Utama. I don't know what that is, okay? But needless to say, that is the catalyst there. So W Buy on the move up here, guys, and halted at 980. The tap, you ask. Nobody asked, but I'll tell you guys anyway.
Before the ask, you're preempting the question.
Right?
There you go.
The tap, guys, $10.29. We're halted at 980, so slated to rocket up at the moment, and I'll tell you exactly when this bad boy halted, 12:35.22. It is 12:39.31 when I speak about this, so it should open up at 12:40.22. 12:40.22 should be when this one opens up, assuming it is a 5-minute halt. That is a good look on WBUY, but back to my trade here on SERA, long 716, looking initially for a 7 hold and then a VWAP dip. If this breaks and closes below VWAP, that will be the end of the trade. One entry here and then looking for another entry at VWAP. That is the look there. BlackBerry, Adara, hello. I really like to talk about Upstart holding, please. Big move incoming. Yeah, I mentioned that at the top of the show. UPST's been rocketing up, Adara.
Yeah, I mean, it's more than Upstarted at this point. It's more than started up. We are rocketing to the upside. This early move was really gorgeous, and then we kind of now it's kind of like still headed higher. We do have sort of a flat top though, I would venture to say, just to skosh here around this 37 level. I'll look at this on the daily chart.
Really good too.
Pardon?
Tesla looks really
Oh yeah,
good
Tesla
too.
looks.
245.50 flat top breakout, higher lows. It looks really good. Yeah, I don't want to digress.
No, it's okay. Yeah, I mean the longer term Upstart. I'm just looking at the daily chart here too, because different time frames. We had this gorgeous ascending channel, like beautiful, that we broke August. Then we kind of flying to the low side. Now it looks like we're making a little bit of recovery. To the upside, but yeah, generally still like lower. I mean, I'll argue if we start from like November 9th, we're seeing slightly higher lows. So it could be of note longer term, but yeah, intraday, I would be, I know I'm gonna use this word again because I love this word, I'm so sorry. I'm gonna be very cognizant of what we do at this 37 area, because this could be a flat top break, because we did have this perfect top twice, and then we had these failed wicks to the upside. So I would say if we break a lower low, keep an eye out there. But yeah, Upstart looking pretty fine. Yeah, pretty fine indeed. And there goes Tesla. Wow, Tesla, you Cybertruck driving off into the distance there.
Good look on TSLA here. Higher lows throughout with that 245.50 flat top. Look at that. None of the closing prints until this one over here, assuming this one closed at the level, was closed above 245.50. This is kind of the same look at, we just looked at WBUY, higher low, higher low, higher low, flat top at 245.50. Be on the lookout though for resistance to show up at yesterday's high. We're not off that by that much. 246 and 2/3 were the wicks, and the closing prints at yesterday's high bring us back down to 246 and a quarter. So we're at a key level based on yesterday's price action. Tesla looks awfully good right now. I'm liking it. I'm liking it. I feel like I'm late to the party, obviously, because we can't really trade as much as we have been, you and I, because we've been yapping up a storm. Yeah, I mean, I would argue it's been Besla today. Hey. Except for my brief shorts. But you know what? We use proper trading discipline, so I'm not going to cry over spilt Tesla Sim shares because paper trade. But yeah, I mean, that analogy. It just moved $1.50, Adara, from when I made that little call. 245. Tesla indeed. It's absolutely rocketing up TSLA. It's a beauty, and it's completely counter market. Look at Tesla go, baby. Congrats to people in Tesla. Yeah. Like that is. I'm sure Elon is smiling today from his Cybertruck. Right? Yeah. Henry Chung, thanks for the Tesla call. Would have missed it within seconds. That's what we're here to do, my friend. We're here to please, baby. Oh, sure is. But yeah, absolutely. Just keep in mind, Henry, that we have possible resistance coming up on TSLA within about, 25 pennies, 20 pennies or so. Not saying we find an initial resistance level there. It could blow through it. Again, one of those ones that you have to keep an eye on. But Tesla absolutely rocketing up to the high side right now. At day's highs and continuing to print day's highs, about to break through yesterday's highs as well on TSLA. 3 1/4 to the good. Cybertruck. Sean's joining in. No, look, guys, I love the Cybertruck, but right now people are just they're selling them like for double the price. You got to see some of these ads I've seen. It's insane. People are selling their spot in line on Facebook Marketplace for like $4 and $5 grand, right? I'm not paying that, man. Give me a break. I'd rather wait a couple of years. Yeah, I mean, but like at least for now, we can say the stock keeps on Cybertrucking.
for the time being.
You just want to get that in there.
I really did.
Yeah,
well, also because I
you
saw
really
someone
like
here
to
saying
get it.
TLT keeps on trucking, and then I was like, well,
There you
Tesla, Cybertrucking. Yeah, no, I'm so sorry. I really apologize.
Oh, it's
there.
all good.
But yeah,
So
but yeah, the story remains Tesla really strong, and some other people in the chat thanking you for that call.
Absolutely.
So
I want to mention as well, WBuy. Neil just putting in the chat now. The tap on WBuy is $11.99. This monster halted at $9.80, so we're talking about a $2.20 increase from the tap. So obviously we're going to have a 10-minute tap, 10-minute halt here, if not more. They come in increments of 5, guys. So right now we talked about it opening up at 40, so it should be opening up. If it's going to be a 10-minute halt, should be opening up very soon. The halt time, guys, on WBuy was 12:35:22. 12:35:22. We are at 12:45:27, so we are 10 minutes past. So it looks like it's going to be more than a 10-minute halt on WBuy. But it's absolutely rocketed to the high side, and the tap now has increased. It's still circuit breaker, so it's not a news pending yet, because the news pending halts, they can be anything, and then you got to wait, right? You could. Yeah, it's a problem sometimes if you're caught in one of those news pending. 1160, 1191, the tap is changing as quickly as I can mention it, but it is in that high $12.21 now is the tap on WBuy. It's already up 64%. It's going to be up a lot more once this bad boy opens. Small cap gappers galore. We got several in the triple digits today.
yeah, I was going to say the small cap recap today was very bountiful, very fruitful, because there were so many to choose from. Literally, the small cap gappers kept it coming. MLGO was even, that one was moving pre-market. And so sometimes those pre-market movers, they don't always move higher later, right? But even, and then we were at, I think what I did the small cap recap, we were below 100. So that one definitely ratcheted to the upside quite quickly there.
Like that.
MLGO, yeah, I mean, definitely a small cap kind of day.
Oh, yeah.
For sure, but I mean, also a Tesla kind of day. So basically the market is doing her thing 21.
Oh, there you go, baby. There you go.
Wonderful time.
Yeah, as soon as that bad boy opens up, we're obviously going to try to be present to it. We have to talk about these subjects that we're talking about today. We're talking about journaling. In case you're just joining us, we've got like this step-by-step procedure. I showed you what I used back in 2021 to narrow down my pre-market search, some of the data that I would collect and put that in there. I'll put it up again for you in a second. We showed you how Wayne, he is the assistant manager here on the floor. He journals very, very well, very detailed, includes pictures of charts, screenshots of charts, etc. Articulates his trading plan, states what he did well, what he did poorly. We're talking a lot about that, guys. I think journaling will really help, especially newer traders, really narrow down, focus on what they do best, what they do poorly, try to figure out areas in which to improve. And that is the whole point of why we journal. We're going to start that bad boy again in about 5 minutes or so. Or sorry, 13 minutes. We'll start the lesson again, guys, at 1 o'clock. From now until then, let's talk a little bit about either any questions you guys have with respect to what we've already mentioned for the journaling lesson. If you guys have any tickers you'd like Adair and I to look at, put them in the chat as well. $12.70 now is the tap. That is almost $3 removed from the halt price, baby, on WBuy, WBUY. This thing is an absolute rocket. Still halted. Looks like it's going to be a 15-minute or longer halt. We've already passed the 10-minute cutoff. We passed, obviously, the 5-minute cutoff. What a move up for this small cap gapper. It does have a catalyst. I mentioned it over here. I'll put it again over here. Brief. WBuy Global announces memorandum of understanding to acquire PT3 Sakti Utama. Sorry if I'm pronouncing it. My pronunciation is not the best there, but I don't know what language that is, and nor is it obviously my native tongue. So yeah, that is the look there. Just wanted to mention that. Anything you guys want us to look at or answer with respect to some of the subject matter today, put in the chat. Paulie D, Sharif should review the next best trade on Li Auto. No, said too much about Li Auto already for like a year's worth of.
Has it been a year of Li Auto talking?
No.
You said enough worth a year.
I've been bullish on Li Auto since May. I got into Li Auto in September, or no, sorry, late August. I got into Li Auto. Okay. Yeah, I've been bullish on it for a while. It was actually during my meta trade that I really started to become bullish on it. That's neither here nor there. All right, check PAL, says futuristic. You want to have a look at PAL?
Yeah, let's look at PAL. Let's see if it's our PAL today. I'm not seeing PAL. Is this the right ticker? What index is
good question.
Yeah, if whoever put PAL, yeah, futuristic, do you mind like just, you know, what?
Yeah, just put in, just ensure that the ticker is accurate. And we'll definitely have.
Yeah, I am not. Oh, PAPL. Okay, thank you, futuristic. There, appreciate the. There we go. Pineapple Financial, great name and very apt. Given maybe this is why this was brought up, given the theme of the day. But also, I mean, to be fair, futuristic. As much as that might have actually been, maybe it was a bit of like a, you know, a fun little move here. It also has a really strong daily chart. Like, you know, it's valid on a couple moves here. We had a really nice upward channel, and then we completely broke to the upside of that upward channel. We are up roughly 50% on the day. Thank you very much, futuristic, for this move. This is also like legitimately a strong daily chart, though. As much as I think it was a skosh of a roast there, I do think that it's solid. So there was some news, this one from December 1st. It expands into Western Canada with a new corporate office in Metro Vancouver, British Columbia. And? Did not realize Metro Vancouver existed. Learning new things every day.
Metro Vancouver?
Yeah, I guess like the metro area of Vancouver. I do not know. But yeah, I mean.
Toronto used to be a metro area. All these cities were not connected. They were all individual cities.
Really? Okay.
Like Scarborough, Toronto,
that
North
I did
York.
know, yeah. Yeah, because Winnipeg's entire thing was it used to be cities, so I'm like pretty like familiar with that whole, yeah, I know, it's interesting. But so yeah, so PAPL, thank you for bringing that one up, futuristic. I really like the daily look on this one, although I suspect it was maybe brought up because of the company name. But still strong daily chart, definitely upward trend breaking to the high side.
With respect to Tesla, guys, yeah, I mean, are we really surprised we rejected off this level? I mean, look at this. This is yesterday's high, and look where we rejected off. So yeah, support and resistance works, guys. It really does. And this is a, yeah, fantastic short. Not a trade that I would take. That's not my style. To mean revert, I'm with the trend rather than against it. But for all those mean reversion traders that were looking for an area to get short on TSLA, what better area than this obvious crest that we had from yesterday? We reject off that exact area again for now. We'll see what we do at VWAP. But look, the trend, the upward trend is still intact. We still have the higher lows. That hasn't broken. I think if we really decidedly break that 243 level, that will, you know, kind of put a little bit of the kibosh on this uptrend at the moment. Baron, do you know if XPeng is a level 1, 2, or 3 ADR? I do not know the answer to that. Sorry about that. You'll have to do some research online. I don't even know what.
I was going to say, I didn't know there were different levels of ADRs.
No, neither did I. I know that there was ADSs, American Depository Slips, but I don't know what.
So we're actually going to ask a question then? Yeah. So what's the difference between an ADS and an ADR?
Yeah, you got to go on and
okay, do more research. Okay, I understand.
I've read it before. I don't have.
Yeah, no, sorry. I was just curious. Yeah.
Yeah, no, but you're right. There is difference. Steven. Oh, that's very nice of you, Steven. I appreciate that very nice comment. I appreciate you, Steven. Tammy KB, what resistance level did you see on Tesla? You called a great short. Well, this one I just finished telling you. I mean, Tammy over here, if you look at the 5 on TSLA, look at what we see from yesterday. This giant move up, and then we
yeah,
that's what I was talking about.
Yeah, no, it's just so cool to like see it live again though too, right? This is amazing.
I mean, it really held to the T.
Yeah.
Right? There you go. And we obviously had issues with that level already earlier, Tammy, when like at around 9:50 or so, right after the bell. We couldn't break through that level, but then when we made that higher low, and we had a basically 245 flat top, you know, that really started sounding the alarms. The thing that I'm going to be looking for most over here is what if, number one, this comes down, does it hold VWAP? So far, we haven't had much respect for VWAP on this Tesla chart. Look, breaks above it, breaks below it, breaks above it, breaks below it. No respect for VWAP on this chart. So the fact that I'm looking at VWAP already, you know, should I'm already doing something that I really shouldn't be doing here, but I'm cognizant of VWAP. I'm not using it. I just want to see if it's going to bounce off it. What I really like, though, is this upward trend channel, upward trend line. Does it bounce off this upward trend line, right? And right now, the uptrend line and VWAP are in the same area. So right now, it could bounce off VWAP, but it may not be respecting VWAP. It might actually be respecting the uptrend line. So we'll have to wait and see what we get off that. I want to update you guys on WBuy. The tap is now $13, guys. $13. The halt level is $9.80. It's still halted, and the tap is 13, Neil. So this one is an absolute rocket ship to the high side. Quickly, we're about to restart the lesson in about a couple of minutes, but I want to mention the NQ. Downward, lower highs on the NQ. Come to the chart, Ram, if you're able to. This 15.9 area, we've been kind of dancing with it all morning, and we're below it right now. We kind of had a couple of wicks above it, but the trend is still intact. Lower highs all throughout after that opening range drop. The opening, which is the bell, we dropped it aggressively, kind of tried to bounce above VWAP, rejected, and we've been making lower highs. And this is the lowest low over here, 15.863. We haven't printed a newer low, but the lower high trend is still intact on the NQ. Tesla, the outlier. I'm still involved in this SERA trade, about 10 pennies out of the money, looking for a 7 hold. If 7 doesn't hold, I'm looking for a dip trade at VWAP. If it breaks VWAP, that is the end of my trade. This is a planned dollar cost average. I want to make that very clear because I've been yapping a lot about that. I'm looking for a newer high. A newer high comes vis-a-vis a 7.25 break. We'll see if we can fill that gap into 7 and change. All right, taking a couple of questions, and then we're going to go on to the subject matter. None of something. I like that name.
I like it. It's funky.
Yeah,
It makes
absolutely.
you think. It makes you think.
Thank you, Neil. I yanked with Tesla going up to 146, and thank you, Sharif. I'm taking profit as it comes down. Love for all of you guys. No, love for you, my dear friend. Thank you for having such a cool name, and thank you for participating in the chat. Magic Mike, second best name in the chat. Sharif and Adair, really nice content throughout the week. A request, perhaps. Can you also cover the infamous bounce play strategy? I know it's not your style, but you have many experts on the floor. I will make a note of that. Thank you very much for that suggestion. I'm going to try to categorize it into something because, you know, we have like chart pattern weeks, candlestick pattern, indicators week. So and try to figure out where we can include that.
Yeah, I was going to say, I've been thinking potentially, you know, I found some notes on different trading strategies or styles, so it could maybe fit into that. I don't know when we do that week, but I'm just saying, like, you know, that could potentially off the top of my head there. But yeah, very interesting idea.
Absolutely. All right, let's circle back now to some of the content. I'm just trying to figure out where my notes are. There they are. All right. Okay. So, trading journals. We're talking about trading journals, why use them, and how to use them. They have a lot of benefits, guys, okay? Such as giving you the ability to keep track and monitor your progress, especially if you're a new trader. You're really going to want to do that. You know, when I was a new trader, I think I felt like a lot of it was overwhelming. It's like information overload. You're talking about floats, market cap, you know, different indicators. You're going to want to kind of be able to write things down, write what you're good at, write what you didn't do well, etc., to kind of help, you know, alleviate the information overload. That's how I felt. I don't know how you guys feel. And to also see which of your strategies and systems have the most amount of success and help you determine areas where you require improvement. Trading journals can even be used to test the waters before you dive into an unfamiliar market. And you know, you can equally use them with paper trading as you do with live trading. Here is some information that you may want to include in your trading journal. The date, obviously, because you want to be able to cross-reference the actual trade with a chart. If you haven't taken a screenshot like Wayne did and included it, you want to go back on the chart, so you're going to need a date. You're going to need the name, obviously, of the stock or the ticker, the number of shares and or your total investment. And the reason I say total investment is because there can be a marked difference between how you trade when there's a small amount of money on the line versus a large amount of money. So you're going to want to know, is this a big boy trade? What was I taking? I was just wetting my beak here to get involved in a trade. So you're going to want to know that so you can later reflect on it. The description of the trading signals. When I talked about Wayne's, let me actually show it. When I talked about Wayne's, where the hell is it, man? Ugh, I hate when things are all over the place.
Yeah, it's so hard too. I find like when you have Super 8 open too, it's a whole other.
Okay, so there it is. Let me open it over here. Dang it. This is Wayne's trade over here. This is Wayne's journal. So when I'm talking about the actual description of the trading signal, look what he writes here. Gap fill, right? So the whole thing here, what the signal was he identified a gap fill, okay? The description of the entry and exit signals, okay? What prompted him to get in? Why was he interested in that level? What prompted him to get out? Why was he taking profit at that particular level? Articulate it, okay? Stops, your stop losses used, and the reasoning behind them. Where were you placing your stops? Why was your stop there? Was it based on a support level? Were there multiple support levels? Did you base it only on the amount of risk to reward that you had and you didn't base it on a technical principle? Articulate the reasoning behind your stop and the total gain and loss from the trade. Was it a winning trade, a losing trade? If it was a losing one, was it a small one? If it was a winning trade, was it a big one? You want to talk about that? Talk about your emotions as well. How you felt, the things that happened while you were in the trade. Okay. So first and foremost, a trading journal helps you ascertain each step's viability. What do I mean by that? Every trader has multiple different setups that they utilize depending on the situation. However, what many traders fail to realize is that they might be better using a certain setup than others. So I've talked often about, with small cap gappers, you could take a dip trade off a key level that was established previously or in the pre-market. Or what I did a lot in 2021 with small cap gappers was I waited for them to make a pre-market high, and then I waited after the bell for them to break the pre-market high and then took that bad boy along. That was a particular setup, right? I also have a different setup called, I was using back again in 2021 on small cap gappers called a VWAP hold high of daybreak. It was essentially a small cap gapper that made a big move up and then retraced into VWAP, held VWAP, and then at around 2 o'clock, 2:30, when we're getting closer to power hour, if it was still holding VWAP, I would take it long for a power hour move above the high of day. So it would break the high. So multiple different setups that you can have articulated, okay? For example, some traders are bound to do better in trending markets, than in mean reverting markets, while some others might have skills more suitable for markets that are range bound. We talked about this when we talked about channels, upward channels, downward channels, consolidative channels. How do you trade channels? Well, to identify a channel, obviously you need 2 points of contact, 2 lows connected, 2 highs connected, and all of a sudden you've got yourself a channel. So you know where to get short, where to get long, and where to take profits, okay? Once you have a few months of data, typically you want about 3 months of data or so in your trading journal, you can open it up, take a look at each individual system to see how successful or unsuccessful the trades have been for you. So for example, if I was to take my pre-market high break on my small cap gappers, assess that to see how well that particular trade did versus my VWAP hold high of daybreak, I want to see which one performed better, right? So that I can focus more of my energy on that particular trade. You're not going to have this information unless you're recording it and you're you're able to digest and review that data later, okay? I want to make that point very clear. When you see certain systems are more profitable for you, it is best to employ those systems at a higher frequency so you can turn bigger profits. So if I look and my data is showing me that my VWAP hold high of daybreak setup is absolute nonsense and it's not printing, but my pre-market high break on small cap gappers is, I'm going to focus my majority of my efforts on the pre-market high of daybreak setup on my small cap gappers. Anything to add, Adair?
Yeah, no, I think yeah, it's a good point to kind of like this came up yesterday too with regards to trading psychology and fear and greed, and kind of how at least I found in my experience I was more susceptible to giving in to fear or greed when I wasn't using a strategy that worked for me, right? So I think kind of being cognizant of that, being aware of that, and I think even journaling will help you be more aware of that to a greater extent. So I think that's my piece on that. Yeah.
Absolutely. All right, moving on. Point number 2. A trading journal can help you work on your weaknesses. Surprise, surprise. Right? Just because certain systems work for you, that does not mean you should only use those systems and forget about everything else. The fact is that trading systems take a long time to develop. Don't I know that? But it is said that trading strategies, most of them will fail eventually, and they need to be replaced. Keeping this in mind, it is important that you always strive to find new ones and replace old failing strategies. Now, it's not about the fact that you're executing them wrong. We've talked about this before. Oh, by the way, I gotta interrupt. W buy just opened. It went up all the way to 1430. W buy is absolutely flying to the high side here, but it is coming back down into that $12 area. This one is absolutely wild. It is up over 120% now. It is trying to do that dance with no pants in front of $13. Quite spready from what I see here. About a 20 penny spread, now 50 pennies. So be careful with this one. It is, I don't want to say a tiny float. It's got 16.25 million shares, a $628 million market cap. Clearly, we have some support over here. I would say at $10. We were halted at that 982 level. It looks like we're going to halt down here at 1150 after making a 1430 high. Looks like we are halting. Yes, we are halted now at $11.50 to the downside. So be aware of that bad boy. W buy, all sorts of crazy there, baby. Say that again. Okay, so the Katina man is $3 in the money on the Microsoft short, guys. For anybody following along on that, he's still holding it. When you're what the point I was trying to make is, what may work in a trending market may not work in a consolidative market. Okay, and so you need to make sure that the trading strategies that you're employing are conducive to the current market that you're trading in. All right, and so that's why some of these trading strategies need to be recycled or dropped altogether. And that's why when we talk about the trading journal helping you with your weakness, it's not to say that your trading setup is not sound. It just may not be right for the market, the current market that we're in, and you need to be able to digest and interpret that data in order to make that determination. When looking for new strategies, you will find that trading systems can sometimes be quite tricky, even when it comes to easy trading strategies, As such, there is a possibility that you did not understand the system properly or you were not implementing it correctly. And those kind of determinations you'll have to make by analyzing your data. When it is time to review your trading journal once again, you can compare the performance of the two periods to see if you experienced any improvement. And that's really what we're trying to do here. We're trying to be able to look at one period versus another to see if there's any marked improvement, or maybe the opposite. Maybe you actually got worse because you traded something, you switched something that you shouldn't have. Or maybe because the current trade or the trading setup that you're using is not conducive to the current market, Adair. Anything to add? Yeah,
I was going to say too, I think part of what we were talking about with regards of understanding what the general market is doing, because we were talking last week too about how a lot of indicators won't work if the market is consolidating, right? So I think, yeah, it's a really good point, I think, to when you're planning the trade as well, to think about, like, is this trade going to work in this market? Or, like, let's say you have a trade plan, but then the market ends up being a little bit more consolidative. Then you think, like, maybe you won't use that indicator as your, as I guess your point of entry anymore, right? So I think part of it too is you're able to be more adaptable and more aware of these factors, I guess, if you write it down, is kind of the vibe.
I agree.
Yeah.
I agree.
Thank you.
Okay. Moving on, point number 3 with respect to trading journals. You gather industry-specific data. All right. So I was having a conversation with Patrick Langlois earlier. I'm saying, if you're in a particular field or you have expert knowledge in a particular field, it may help your trading strategy, because when the catalyst comes out, you'll be able to ascertain whether this is a real important catalyst or whether it's just, noise. So here's what I mean by that. It might turn out that you might have a natural aptitude for small cap gappers. It could also be that your experience in the car industry makes you far better at trading EV stocks than tech stocks. So if I know, for example, like today, NIO divested their battery plant to another company, but yesterday they acquired the company that was making the battery plant chassis for them. If I had car-specific knowledge, that may have helped me somewhat. I'm not saying it will, but it's something to keep in mind. And there we go on Sarah. All right, baby, we're going to take a little bit of profit up here.
Dipping the beak into the water.
Well, there you go, right?
Yeah.
I'm going to take a little bit of, because this one's moving up a little bit. We'll see. It's a bit spready at the moment. All right. Although many traders are able to identify markets in which they have an inherent advantage, a trading journal can make sure you are aware of where your strengths lie. Remember that you can further break down the area in which you trade securities. For example, you might be extremely knowledgeable when it comes to computers and are thus able to trade stocks at computer manufacturing stocks with ease, but fall short when it comes to cloud-based companies. Again, you're trying to basically see if some of the technical knowledge that you have helps you in your trading. It's not a hard and fast thing, but something to keep in mind, okay? Point number 4, a trading journal helps you set up incremental goals, and I like it for that. You can set up goals which are marginally better than your previous ones so as not to put unnecessary pressure on yourself while you are still in the learning process. And I really think that that is an important point, right? Remember we said yesterday, be kind to yourself when reviewing your trades. A journal is a great way for you to decide what goals you are going to pursue. How will you measure the progress? For example, are you measuring it on a time frame basis or by P&L basis? How are you doing that? And what you are going to do in order to achieve your goals. Do you have to change your strategy? Do you need to tighten up a little bit your stop? Is your stop too wide? Or are you taking too much shares? Are you trading at a too volatile time of day, right? Where, you know, you may not have the internal composition to be able to trade at that time of day. You need a slower time of day like myself. You have to be able to narrow all that stuff down to learn more about yourself as a trader, and journaling definitely helps with that. 5th point, a trading journal holds you accountable. And this is, I really feel Wayne did a fantastic job in his for holding himself accountable. He graded himself. He gave himself props where he deserved props. He criticized himself constructively where it was warranted. And so I think Wayne did a fabulous job there for that. All right, we're going to wet our beak on another little profit over here on SER8. Keeps moving up at the $7.40 mark. As such, having a trading journal means that you are less likely to make trades that are not part of your trading plan. For most traders, it is the impulsive trade that causes them to take a loss. I could not agree with that more. As such, being able to look back at points in time when you did not stay true to your trading plan and ended up taking a loss will help you the next time you are ready to do the same. Case in point, I hate to keep using Wainers here as an example, but he sent me a hell of a trading journal.
It's a really solid example.
It is, isn't it, right? I keep losing it, Adira. I don't know where the hell it keeps going. I think it's on a different screen or something, which is why I'm... Oh, here it is. There it is. So look what Wainers wrote over here. With the Uber, one that he gave himself a C on, right? Which is the Uber trade. Look what he wrote. Jesus, thing moves aggressively. Tried breakout, stopped, flipped short, stopped, reversed long again. This is impulsive trading. This was not part of his plan. Honestly, this is some unprofessional trading. If I like the long, why flip short, he wrote. There was size chasing on the bid the whole time through like 59.30. I don't mind first long, but the short was uncalled for. In what world do I think I am F trading God and think if I'm wrong, the market is wrong and I must short? And then he goes on to say some more expletives. Also added to a loser, bad process, grade C. This is fantastic. This is
Yeah.
fantastic from Wainers over here.
Yeah, no,
You
for
gotta
sure.
give him mad props on this journal.
We will give that journal an A++, is what we'll
I
do
like
there.
that. I like that. I like how you're grading his journal now.
Well, yeah,
right? Not
I
the
mean,
grades,
you
we're
know,
grading the journal now.
well, I'm just joking because he was, the
No,
grades in there
you're-
too.
I'm
Yeah,
not
and what I
saying
like
that.
too in that is that he also gives himself a B on, I think it was the Google trade that didn't necessarily go well, but he gave himself a B because he's like, I didn't do bad trading habits. I got out when I needed to get out. I
Okay.
respected the stops. So I thought that was a really cool aspect of that journal that I liked as well. And it goes back to something I mentioned earlier, which is basically the idea that I learned that I thought was really powerful is that just because a trade doesn't necessarily go your way doesn't mean it's a quote unquote bad trade as long as you adhere to your
Absolutely.
principles. It's something Neil said to me in the chat once that I think was really, it made an impact on me. Obviously, I paper trading, but I think it's still, I think the concept is very valid.
Yeah, and remember when they were talking, they were, people thought they were trolling me, but they weren't. They were saying sometimes the best trade is the one which is actually a loss, and they were talking about plug power. I took $1 a share loss on that, but trust me, if I've been holding that bad boy, I'd be like down $20 a share.
Well, yeah, you'd be downgrade, another downgrade today. Yeah,
I'd be downgraded and fired. No, for real, guys. Point number 6. We got 8 points. Point number 6. A trading journal helps you manage risk more efficiently. How? Many people do not realize that their risk management technique is costing them a lot of money. It's deficient. You need to be able to realize that. For example, it is possible that you might have the same risk management strategy for both small and large trades. This could be a terrible idea since you need to be more prudent during larger trades as they could end up costing you a lot more. And think about how your mindset, your state of mind, your fear, or your greed, those feelings, are they going to be equal during a big trade where you have a lot of money on the line and a small trade? Maybe if you're a real professional and you have many reps, but if you're a newer trader, you're likely to feel a lot more fear during a trade where you have a lot of money on the line, and therefore you may have to manage your risk management system has to be a little bit different. So you need to be aware of all that. And so if you're already planning your trade, you know how many shares you're going to get into. This has to be factored into your risk management strategy before the get-go, okay? A trading journal helps you see where you might be making mistakes with the handling of risk. It could be that you are not taking big enough risk. I just finished saying that, maybe you were taking, if you take big size, your state of mind is going to be different, but sometimes it could be the opposite. Sometimes you're not putting enough on the line. You have winning trades, but the amount of money you're getting out of them, right? It's not really, it's not getting the juices flowing, right? It could be that you're not taking a big enough risk to generate a substantial reward by setting up a stop loss way too close to the current price, or you have a position that is simply too small to result in any kind of meaningful gain. The opposite may be true as well, and after some time of journaling, you might decide to shrink your position size since you find you cannot cope with wild swings. And the point I made earlier was a lot of traders, they'll increase their size. So like I told Adair, for example, I'm like, these small cap gappers, especially the ones that run triple digits up 100+% a day, they come in bunches. They can go quiet for a while, and then all of a sudden they come in bunches and you've got 3 or 4 a day. One usually is the catalyst. Will have one running on a Monday, and then on Tuesday you'll have like 3 or 4 that are above 100%. At that particular time, when I know it's hot for small caps, I increase my share size. But when it's a dead market for small caps and I come in and I look at my scanner and the highest one on the day is like 40%, followed by a couple that are in the teens or in the low 20s, it's not the time for these small cap gappers. So I size down. You have to know the market in which you're trading, okay? All right. 7. A trading journal helps with the psychology of trading. And that's kind of what we've been talking about all week and how we want to kind of incorporate what we're talking about with journaling today with the psychology. Many people have mental blocks, which do not allow them to take risks. Fear, lack of conviction. Remember that in order to make meaningful returns, you need to take a sufficient amount of risk. And I keep harping on what the Katina man said, I think it was early last week or late last week, early this week, I don't remember. A scared trader is a deficient trader, okay? Emotions in general play a massive part in your trading, especially if you are a day trader. A trading journal can be a great way to see if you are letting the emotions get the best of you. We talked about fear, we talked about greed yesterday, and we talked about biases on Monday. You should be able to articulate all of those. For example, a trading journal can help you see if you ever get angry after a loss and start making trades which do not make any sense so as to recoup your losses. Revenge trading. How many of us have revenge traded on this floor? I have. That's just the way it is, part of the process. Sarah just came back into $7. I have to be careful here. This switch absolutely huadunked off that 740 level, but it's still holding that $7 level. You have to digress for a second. Let's see how it does around 7. Still, I'm still interested in a dip trade around that VWAP area. I just want to make sure VWAP on my other chart.
That's a solid bottom, though.
It is.
That's a really good point.
Yeah, but it could be a flat bottom break because we have lower highs, right? So I need to be careful. Here, there's the fill. Let's see if we get up again, or we're going to continue to break. Let's see if we get the bounce off VWAP. So far, we're getting the bounce off VWAP. It doesn't mean we're out of the woods yet. Let's see if we can bounce back into that $7 area. I have a 96 average now. I'm going to cut this if it breaks through 70. So far, bouncing back up. Let me just pull it up on the side here so I can see where exactly VWAP is on my chart. It's still holding VWAP. That's the thing. But the lower highs are concerning. No question about that. Yeah, I'm going to send it back to you for a second here while I'll put in a couple of...
Yeah, no, of course. Que sera, sera. You know, but yeah, so let's, you know, let me look at the chat. Okay, here's what, it's tagged at you, but you know, regarding psychology, can you talk about ways to overcome greed versus letting winners run? When do you become too greedy versus letting plays go? Thank you, Hayden Ponish, for the question. I think kind of what we talked about is if you have like a plan for your profit takers or your beak wetters or what have you, then, you know, maybe you can kind of help kind of avert that, right? But I think, yeah, just holding on, I think the bigger issue for greed sometimes, and this kind of is where greed and fear intersect at a very harsh, you know,
fear and
car
greed
crash
in Las
there.
Vegas?
I would say there's a big, yeah, fear and greed in Las Vegas. But I would say, yeah, there's a big intersection between fear and greed, at least, you know, from my limited paper trade sim experience. When you hold on to a loss for longer than you need to, because you're greedy that it'll somehow run it back up to your point of entry, right? But I think with regards to letting your winners run for too long, I think it's important to, you know, use, like we're talking about this, use your points of entry to kind of help define your points of exit. So for example, the Starbucks trade, which, you know, I'm pretty happy with here, paper trade. I got in, someone was asking me why I got in where I did. I got in at VWAP because I was noticing we had some strength there. We were, to the high side, we were up on the day. Starbucks was coming off of a massive losing streak, its largest in its history of being a stock. So I was really interested in the fact that it was up. We had the Morgan Stanley conference yesterday. So point is, a lot of catalysts on this one. And I did take my first beak wetter. I did plan this. I didn't take that many shares. Got half my position at 96.8 because that was where we had our swoop down in the pre-market earlier on the day. But then the reason I stayed in here and the reason I'm still in instead of taking this profit here, which I will admit the scalpier part of me really wanted to, is because I said we're gonna try to be more disciplined, right? Until we break a lower low, which it looks like we are kind of on the precipice of doing, I will stay in this trade. So to answer your question, I think you have a better chance, and I think Sharif put it really well yesterday when we were having this conversation of waiting for your actual stops to trigger sometimes before leaving the trade, because you're gonna kick yourself and you might, you know, be more upset if you leave just because you're trying to protect your profits. Maybe that's arguably more greedy, leaving when the getting is good rather than actually waiting to reap the full effect of you know, the profits. Because if you wait for your stop loss, you know, maybe if you hadn't gotten out so early, you actually would have had more profit, right? But I think, and at least from my experience, I think it, you know, sometimes it is greed ending a trade early because you want to take your profits as much as you can, right? So I think it's a really good question. I don't know if there's a solid answer to it. I think it just comes from, I think being disciplined can help avoid greed, would be what I say to that.
Before we continue, thank you for taking over there. I just have to do a couple of, our friend Jeremy Diamond, we know his name is Jamie, but it's a joke, right? Our friend Jeremy Diamond is on the Hill today. He's testifying in front of the Senate, and he had some choice words about the crypto industry, and I want to read it to you guys, because, well, he's a big player, and, you know, what he said is followed by a lot of people. Quote, not paraphrase, the only true use case for it is criminals.
Oh!
If I were the government, I'd close it down. Jamie Dimon on cryptocurrency in the Senate. We'll see how long that sentiment lasts before JP Morgan starts funneling money into Bitcoin. We'll see. No, I'm tongue-in-cheek, of course, but that's pretty declarative from him. I didn't think that he'd be so declarative. He'd at least want to leave himself a little bit of a window. Should things change later, he might want to funnel money into it. So why is so declarative? The Katina man says he's building his own crypto, so he's got some, he's got some interest in other places. And yeah, that's a very good point. I've always been deeply, quote, I've always been deeply opposed to crypto, Bitcoin, etc. And then he said, he points to Senator Elizabeth Warren, Pocahontas, pointed out the only true use case for it is criminals, Diamond testified. If I were the government, I'd close it down. So he goes on to say. Okay, want to put that out there. Moving on. Yes, we talked about revenge trading, and a trading journal could also help you see if you ended up making rash decisions after you had a run of successful trades and vice versa. Yeah, so that's interesting as well. So in the same way we looked at it for revenge trading, we may not want to get too overconfident, right? And start taking excessive amounts of risk, and that, having a trading plan and journaling would prevent us theoretically, obviously, from doing that, because we're sizing in based upon a plan, based upon market conditions, based on our risk to reward ratio, based on our risk appetite. So if things are planned, they're less likely there's going to be that willy-nilly decision that you can make, on the fly, rash decisions. Last point here, number 8, a trading journal brings consistency. And this one I got to agree with. Eventually, as you continue to use your trading journal, your bad habits will start to diminish, and you will stop losing money as foolishly as often. You still lose money. Let's be real about it. This is because you'll be able to see the mistakes that you were making, and will make sure to try and avoid making them in the future trading sessions. I mean, you ever hear that expression, like the one that George Bush kind of screwed up with, which is, fool me once, shame on you. Fool me twice, shame on me. He didn't say it that way.
How did he say it again?
He was it was all over the place.
That's pretty funny.
But yeah, I mean, if I'm making the same mistake over and over and over, despite the fact that I'm journaling it and I'm cognizant about it, that really, that's my fault, right? And so that's something that you need to be able to ascertain in order to be able to determine that. Certain mistakes are only obvious after you have been using a trading journal for quite some time. As such, it is important that you keep an accurate trading journal in which all of your trades are accounted for, so as to avail the full benefits of it. So I couldn't agree more with that, Adara.
I love
Anything
that.
to add there, or any other questions in the chat?
Yeah, no, I think in general, I think all of this kind of conversation is really making me excited to, do a more active kind of trading journal, because I think you can learn a lot from doing that. And I think just being able to kind of reflect on your trades, and I think in general, holding yourself more accountable is, I think, something that's really valuable. Like I was saying earlier, I used to, when I first kind of began, when I was, trading, only doing like about half the midday, I would, be in the sim, doing the paper trades, what have you, and just kind of trying to, I would write way too many stocks in the beginning and then kind of parse through those. And basically my whole strategy initially was, if it has a catalyst, it must be tradable. And I think too, like the more time you kind of have experience in the market, and the more you kind of recognize what you're writing down. Like if I look back at my notes from that era now, I'm sure I would, be kind of like surprised, like, oh, just because something has like an upgrade from some small stock has an upgrade from one analyst and it's barely moving, like that does not a catalyst make. Do you know what I mean? So I think a lot of it is reflection, and kind of the more you look at the market, the more you understand how things move, and the more you're kind of writing down your thought process. I would also argue you could probably see how your thought process changes, right? So I think there's definitely a lot of benefits of not just the act of writing, although, there are a lot of, there are people that argue, and I would agree, that the act of writing something down actually helps it sink in your brain more, right? So you're writing down trades before you trade, so that's pretty helpful as well, theoretically. And then also when you're able to reflect back on them, as we were saying throughout the day too, if you reflect back, you can kind of see, you can really understand, really reflect and understand, like, this is where I didn't do as well. This is what I'm better at. This is what I'm more gifted. And I mean, if you understand too, not just where you're doing poorly, but where you're also doing well, you can hopefully grow a bit from that. So I think that's Shannon Gregory in the chat here. I really like this. The definition of insanity is doing the same thing over and over and expecting a different outcome. Really great saying, and I think very apt for this conversation. So thank you very much. I think too, if you're aware as well, if you're, the whole name of the game today, right? This whole week with psychology, if you're more cognizant of what you're doing because you're writing down, because you're reflecting, hopefully we're less likely to make decisions where we're kind of seeing ourselves in this rut of losses. So I think that is very interesting. Very much of note. Havana Woody here. My biggest errors have been taking a second dip after making a winning trade and giving back too much of my profits. And I think sometimes too, that's I think really insightful, and I think it's cool too that you're able to be aware of that. And I'm sure we did some reflecting to get to that point as well, right? Because I think reflection is a huge part, and I think sometimes too, smaller share, for example, I'll show on Google. I had this Google short earlier in the sim here, and I got in because I was seeing lower highs, lower lows, and I took a really small share size. Because I did, I had the Starbucks trade, which is still kicking. So basically I was like, because Google can be a skosh more volatile as a mega cap, I wanted to give, minimize my risk a little bit by taking a smaller share size. So that's kind of, I guess, my example, although it is a sim, so it's a bit different. I guess to respond to what Vanna Woody had to say there, yeah, I think sometimes minimizing risk maybe while taking some of these other dip trades, especially if they are a bit riskier, could be a way to kind of get around that. But yeah, I see your point. It is really easy kind of do the opposite of revenge trade, maybe like hubris trading, where you're doing these really crazy trades because you just did really well and you're feeling really good. Yeah, not sure.
All right, welcome back to me.
Quote of the year. Welcome back to me. Welcome back to you.
All right, I was going to talk some Arsenal, but there's some really good comments in the chat here that I have to get to.
Really good comments in the chat.
Yeah, fantastic stuff. Frank Jones, this actor trader function in TOS is a great resource. You can watch stocks like Sarah drop down. Okay. Ivan or Computer on Net. Blockchain technology, on the other hand, have value. The problem is people think crypto is like fiat money. They are not. Sure, they have value since people accept it. Sure, I don't have a problem with crypto. I don't have a problem at all with it. I think that there is absolute value to crypto money. It's definite, it's finite, it's decentralized. It can't be inflated in the way they're doing with fiat money and with the dollar. There's all sorts of stuff. I don't disagree with you, Ivan. D-Loaf, Adara, Sharif. For the Bush quote, "Fool me once." Oh yeah.
Yeah,
Fool
I saw
me
that.
once. Shame on you. Fool me twice. You can't fool me again. Yeah, I'll remember that.
Yeah, no, I know what song you're referring
so
to as well.
funny.
That J. Cole song, "No Role Models." Yeah, that song is in that. That quote is in that song.
Oh, okay,
yeah.
I see. He took
Yeah,
it
I
from
saw
there.
that part. And I was
Okay,
like,
and
there
that's
you
the
go.
end of the trade for
Yeah.
me there. So I take a bit of an L on Sarah. That sucks to be me. It tanked, broke through that level, so that's going to be the end of the trade. We take a couple of beak wetters, but it's going to be a red trade, sadly. Moving on, let's see what everybody else saying.
I saw that username too, and I have no
Come on,
comment.
bro. Seriously? Like I'm not even acknowledging that super chat. Sorry.
Well, it was deleted, so.
Yeah. No. Come on, bro. Get it together. Yeah, John Harper. Hey, it is what it is, man. There were lower highs. I gotcha. Yeah, there was an idea here that I had, but it didn't work out. So sucks to be me. All right, we are done talking about the trading journal. I just want to show you now a couple of pieces over here. This one is the pre-market checklist that I used to use in 2021. Come to the chart, Ram, if you're able to, please. Basically, the idea here would be to put the date. There we go. To put the date up here for the day. And then the market conditions would be for the pre-market, the day, and the aftermarket conditions. I would basically talk about the NQ and the ES. I didn't really care too much about the Russell or the Dow. And then I would put the different tickers over here. And what you were seeing here, the last would be the closing price from the day prior. The pre-market highs and lows would be articulated here so that I would have an idea about what the range was. And then I would put windows. Window 1, window 2, window 3. These typically were for dip trades or ranges that I wanted to get into. This is very specific to my style. You don't have to use this type of style. Fit it around how you trade, but this is kind of some of the stuff that I would use. What's up?
I'm going to Tim Hortons.
You're going to Tim's? I don't want anything because I already had my last coffee of the day. Yeah, Adara?
I'm okay, thank you. Thank you very much.
That's nice of you to ask, Katina Man. The Katina Man was gracious enough. Well, if you were to get a Ramina drink, she wants that $15 Starbucks drink over there, bro.
That's so nice. Thank you.
You brought it you brought it on yourself. She's like, we're disparaging her name.
Oh, really?
Her good name. Sorry, Ram Ram. We love Ram Ram. We're just joking, of course. Let me bring in Wayner's journal again, guys. This is an example of a really good journal. Let's bring it up here. It's dated December 5th, and the first entry is Amazon. And then you see... I gave her a look in the camera because she was taking too long to get to my screen.
It wasn't the chart. The chart was not.
Yeah, because it wasn't a chart. It was a journal, right? Like,
journal.
All right, what you're looking at here is Wayne's journal from December 5th. That's yesterday, right? Yeah. The first entry is Amazon, and then you see right here he has the trade idea. What is his trade idea? Gap fill. Many different dip trades, breakout trades, range trades. His was a gap fill. He articulated it very specifically. Here's what he writes. Underlying already showing strength versus market, and he identifies what market he's talking about. He's talking about the NASDAQ. Form a nice breakout pattern just below the breakout level. Goes on to say, started a starter position around 75S as higher low pattern forms. As you can see here, there's what he's talking about, higher low. These are his entries over here. I hope you can see them. They're yellow, right?
I like his chart setup, by the way, with the purple and the blue and the yellow.
But you see what he's looking at over here? This is the flat top. This is the ascending triangle. Higher low, higher low, higher low, flat top. That's why he got in here, and he waits for that top to break, and then he's wetting his beak all across over here. So that was the whole idea there for Wayners, right? And then he goes on to say, oh, geez, man, this thing moves so aggressively. Added full size on the 146, used a time stop as it was getting choppy off the JOLTS number. So this was specific to an economic release in a certain time of day. So rather than having a hard stop at a particular level, he chose a time stop. Completely up to him. As NQ and ES hold higher highs, it gave me confidence in the trade, and I liked for the first exits around the 40s. Can argue, oh, I left money on the table, but my target for this trade was 147. I'm very content with what I did on this ticker, grade A. I really like this, okay? And then he goes on to say, for Hood, this is a Robinhood trade. Again, now we're looking at the 1 minute chart over here. Look what this is the chart, look what he writes. Looking for the 10 EDB on a small catalyst. Took stop at $9.65. Maybe can get better, but right now, not going to try and optimize this. I'll accept the L and move on. Grade B. And here's why. Happy with myself, to be honest. Didn't retry, revenge trade, on things not in setup. He stuck to his setup on this particular trade. Allocated 20% risk on this trade, took the L, moved on. I mean, how can you not like this? Uber. This is where he got a little creative. Tried breakout, stopped. Flipped short, stopped, reversed, long again. You're going to see he's not happy with himself over here. Because why? He didn't stick to his trading plan. Honestly, this is some unprofessional trading. If I like the long, why flip short? Thank you.
Sorry,
thank you. There was size chasing on the bid the whole time through like $59.30. I don't mind the first long, but short was uncalled for in my opinion. In what world do I think I am the God and think if I'm wrong, the market is wrong and I must short? And then he goes on to say other fine expletives. In summary, he gave himself a C. Also added to a loser. Bad process, he wrote, grade C. In summary, for his particular journal, here's what he said. Let me see if I can hide the rest. Yes, here it is. Rammer? Summary. Very happy with my day. Was disciplined besides my Uber trade, traded my setup on everything else with appropriate risk management plus sizing, can work on a bit of a runner management, but currently really not my focus right now. I think this is one of the best journals and one of the most honest summaries or recaps of one's performance.
Yeah, well, I love that. A, I love how honest it is. B, I like that there's a summary of the whole day, so you're not just getting hung up on one trade, right? So he's not just getting hung up on the Uber trade that inspired some word choices. He's like looking at the entire day and he's like, this is how I feel. And C, I love that he did not, like for the Robinhood trade, he still gave himself a B, even though it was technically a quote unquote losing trade, because he liked how he planned it and he liked that he got out where he did. And I think that's a good example of that difference between like, you know, a trade that wasn't well thought out and a trade that is thought out and just lost, you know, just by the nature of things. And that brings me to a question I like in the chat. How could, from Frost 1349, how can you know if your trade idea was correct or if you just got lucky? Which I don't, that's a really good question.
I think if you journal and you keep repeating, you're not going to be lucky.
That's true, right? Then you'll know. And I think too, like, as long as you adhere to your discipline, like for example, this Starbucks trade I did mention was not something I pre-planned, although I was cognizant of what Starbucks was doing since yesterday when I was like, you know, this consistent, you know, Starbucks had its like worst losing streak of its entire stock life, all 31 years of it. So I was really, you know, trying to wait for a movement to the upside. We did have some catalysts coming out of the retail conference from Morgan Stanley, but my entry was pretty much on technicals. I looked at, we were at VWAP, we were holding VWAP, and I held to the upside. But I did say before I entered this thing, I said, hey, you know what? We're going to take a beak wetter, to borrow Sharif's terminology, at 96.8, because that's where we had that high of day, like the pre-market high. And then also, if we have a new lower low, so if we break below 96, I am outie, sayonara, I am leaving the Starbucks and my barista shall not be tipped, right? So even though it was, I guess, a bit more of a trade on a whim, I'm happy I'm in this trade, and I wouldn't necessarily say it is luck, because it was a stock I was looking at from longer, and it was a stock I did come into with technical parameters. So I think, yeah, as long as you have some kind of plan, even though this wasn't a trade I planned in the morning, sometimes things have to work out, and you just have to be prepared and adapt to the situation.
Yep.
And I hope that answers your question. Thank you.
All right, let's slow things down now. We've went through the lesson like almost 4 times, and now we're going to talk a little bit of Prem. Adam, 4-3 Arsenal away at Luton. We're first in the league. We have 5 points clear of Liverpool. We're 6 points clear of City, and guess what? City plays Aston Villa at home, and anybody who knows anything about the Prem knows that City and Villa are separated by 1 point. And Unai Emery, the former Arsenal manager who got canned, has absolutely been doing a killer job with that team. Shout out to Oli Watkins. He's been having a hell of a year too. Villa and City today at 3:15. I'm going to be watching that. That's going to be a hell of a game. Liverpool, who's now second in the league, 1 point ahead of City, takes on Sheffield away at Sheffield. They're heavily favored to win, and Sheffield is last in the league. They're 20th in the relegation zone, so Liverpool should be taking that bad boy handedly. Another good game is Manchester United and Chelsea. They play at United. That's 3:15. It's basically even between them here in terms of the odds makers. Now, as you know, a lot has been made of the Manchester United manager, Erik ten Hag, and whether or not he still has control over that locker room and the ear of his players.
Oh, you told me about this, yeah.
Yeah, he's there. It's been said, it's been speculated that a lot of the players are, you know, no longer backing him up as manager, and you know, and there are obvious implications that come with that as not playing your role to the fullest extent, etc. He insists that they're cohesive unit, that they're continuing to, you know, do what he has been instructing them to do. Media outlets have been banned from attending Manchester United conferences for not allowing him and Manchester United, the club, to comment on those reports that he had lost the dressing or lost half the dressing room first before releasing it. He's insisting that it's not because they reported it, but because they didn't give him a chance to comment. Look, you know how United is, you know, they have a bit of a longer leash for some of their managers than some other clubs like Chelsea, who will fire you like that, or at least in the past they have. We'll see how long his tenure at United lasts, but let's be real about it. This is a storied club. It's a big club, and the expectations there are huge, and he hasn't delivered. And quite frankly, I talked to a lot of Manchester United fans, and they say it's hard to watch. The soccer is hard to watch. It's not good soccer. So big development in the Prem. Now, any of the people that watch the Prem know that this is the busy time of the year for the Prem because there's no more Champions League at this point. So you start playing every 3-4 days. So that's going to be a big game today for City and Villa. And one more thing before I send it to Adaira.
Yeah.
Arsenal plays Villa away at Villa. So 2 home games for Villa. One against City, and then on the 9th, which is like 3 days, they play Arsenal again. So it's going to be tough sailing for them.
Yeah, so I actually just had a question. So City is the one with the giant stadium, right, with Wembley? Is that Man City or no?
No, Wembley is like neutral ground.
Oh,
They
okay.
play at Wembley like for the cups.
Okay.
FA Cup, where you want it to be neutral, not your lane, not my lane.
Okay, because for some reason I thought Wembley was Man City's. Okay.
So the biggest stadiums in the Prem are Tottenham Hotspur, Arsenal, Manchester United, City, Newcastle, and now West Ham because they took over that Olympic Stadium in the heart of central London.
Okay.
So those are the biggest stadiums. But like example, yesterday, Luton Town, all of 12,000 people, and you saw
that
yesterday.
stadium was really funny. I know
Right?
Ramin also enjoyed that stadium.
It was hilarious, yeah.
Because it was pretty funny. And you're right, it literally was a backyard. People are playing soccer in your own backyard.
Yeah, right?
So I thought that was pretty amusing. But yeah, no, I mean, I'm happy I know a little bit about Premier League. I feel
Yeah,
like
you
my
like
Ted
Ted
Lasso
Lasso,
knowledge is
Ted Lasso.
admittedly very limited, but it helps me kind of, have a leg up in this conversation, so something.
Yeah, sorry guys. I know some people in the chat like, yo, bro, it's football, not soccer. I'm sorry. I'm
Football.
sorry. I'm a lowly North American. What do I know, right? Justin says it's this America. It's soccer. I like it. Harry Lou, Sharif, have you found that your background in law, where you deal with topics that are mostly gray, has helped you to adapt trading, which is also great? Not really.
It's a good question, though.
It is. It
It's
is.
a
But I gotta
really
tell
good
you,
question.
I didn't really feel that there was a lot of overlap. It's really in law. There is always bodies of case law that can point in one direction, and there's others that point in the other one. And what you're trying to do is you're trying to fit the specific fact set. You're trying to make a similarity between the fact set that you want, right? Because it gets really complicated. But I don't feel that there's any overlap. I gotta tell you the truth. That's just my whole look on it. I could be wrong. Maybe others see it differently. I didn't feel that there was a lot of overlap.
Would you say it impacts like how you view the market, though, and how you think through your trades, or you think it's like 2 completely separate paths?
I personally,
I'm just curious. Yeah, 'cause I'm just
no,
interested.
it's a really good question. I really don't feel that there's a lot of overlap. That's just been my experience. Maybe
Yeah.
others who have made the switch felt a little bit
Yeah.
differently, and I respect that. But
Yeah, no.
yeah, I didn't feel a lot of overlap, to be quite honest with you.
Yeah.
Fantastic. Good
Still
call.
such a
on
good
Taboola.
question, though. Yeah.
Yeah. Any other questions or comments you want to put in the chat, whether it's about the Prem or about journaling like we did today, or any other nice mover that's running at the moment? Put it in the chat. We'd love to answer your questions, guys. Here we go. Hampton's Trader. Do you use ABCD patterns on small cap gappers? I know there are a lot of small cap traders that love the ABCD pattern, and I promise you we're going to get to it. I don't use it myself, mainly because I don't have a really firm understanding about it, nor an affinity for it, but it's something that I do want to explore. Very good call out on that, Hampton's Trader. With respect to ABCD patterns, and we'll definitely add that to the list of things to cover. But you're bang on with that. I know a lot of small cap traders really do enjoy that ABCD pattern. Marshall Minority, natty or not? 100% natty, my friend. I'm 41 years old, been working out since I was 18, and no doubt about that. I'll take whatever test you want, but you're paying for it. Let's go. Nick Dubb, can you look at GTLB and thoughts on a move to 70? You want to have a look at Nick
I mean,
Dubb?
I can attempt. Hopefully my analysis is up to par here. But
do
here
that,
is
yeah.
GTLB. So the daily on GTLB is a skosh, sad face, sad emoji, higher high, and then a swoop to the downside. Let's look at the, because I'm assuming when you mean move to 70, RIP my chart. Give me a moment here. Got to get this up and running. RIP the chart. Here we go. It shall be up soon. Okay, perfect. So let me GTLB. Apologies for the interruption there. Thank you for the patience. And yeah, the chart has remained. Here's the daily on. Okay, yeah, I think. Let's see if we ever had like kind of a move to 70. Because I know, Sharif, you've really taught me too, like other past levels are really helpful for kind of looking at if we have the possibility to get other levels. Yeah, I'm looking at the daily case. So the last time we were at 70 that I can see here was August 2022. So we've done really a downtrend on this one. I think, you know, if we have like a higher high, I think that would be of note. But yeah, it looks like this guy's a little bit flat, a little bit stagnant right now. I would say it might take some time because we have not been at this level in almost a year and a half now.
Yeah, it's quite consolidative.
So yeah, thank you for wording that better than me. But here we are. Yeah, I think we shall wait. I would say it's a bit of a waiting game here on GTLB. I'm not, like at 70, clearly we have had it in the past. It's not an impossible level, but I think looking at how far back in the past it's been since we saw this, I think it's a little bit of a food for thought there. Some, you know, kind of munch on, chew on the bone, don't chew on the bone, chew on that there. And yeah, but I think definitely like it's been up the past 2 days off of earnings. If it can kind of maintain that momentum, I am not going to say that a move back to 70 is impossible. We know because we've seen it before. So there we go. That is my attempt at analyzing this here.
Billy T says, Sharif, I'm 39, been trading since 16. Attaboy. Lifetime 92. Haters gonna hate. Tell him, Adara.
Don't do this to me.
Adara was going on a rant today, this morning before we got on the air about how much he doesn't like Taylor Swift. And yeah, we all had some comments there, especially because her dad is a huge Swiftie.
Yeah, Mike Kate. So he wouldn't like me saying that, but also when you have all the Taylor Swift albums but one, and when you're sad you pre-ordered Midnights because you missed out on the bonus tracks, not because you pre-ordered Midnights. Well, no, okay, so my father pre-ordered Midnights and then was sad he pre-ordered it because he missed out on the bonus tracks.
Okay.
So tell me that's not a Swiftie. Tell me that you're not a Swiftie.
He argues that he's not a Swiftie?
Well, so he says that he's just a fan of her music, but again, you have almost all her albums, and you pre-ordered Midnights. He also has a cover album of 1989, so he's the original and a cover album of it.
He's a Swiftie. All right.
Yeah, but anyways, yeah, she was Time Person of the Year.
He watches too, doesn't he?
Oh yeah, he's gonna see this.
He's gonna see this.
He's gonna literally text me and be like, I saw what you said about me and Taylor Swift today. ... Like this text will occur. But also, sorry, there's a question here that I like. Tobias Hernandez.
Yep.
Sorry for the tirade there. Thoughts on having a separate journal just to reverse engineer losing trades, or is a losing trade that is attempted again considered just a revenge trade? I think it's an interesting question. Yeah, I think it's the idea of having a separate journal just to look at your losing trades and why you lost. I think there could be some value in that, right? Yeah. I think in general, even if it's a separate trade, or if it's even just in the example of Wayne's journal to bring that up again, where he's breaking down all his trades in one journal, and he does a really good job of breaking down the trades that lost. And there was one trade that lost that he was still proud of because he got out at a good place. So I think that's a good example of what you're talking about. Is a losing trade that is attempted again just considered a revenge trade? I don't think that's the case. Like there have been times where, for example, my pal Stressla, where I'll lose once and then I'll get back in because I see strong fundamentals. That being said, though, yeah, I don't think it's necessarily a revenge trade if you see the fundamentals there. I think more of where it's a revenge trade is if you're just really you're not drawn by rationality and you're drawn by being rash. I think that's where it becomes a revenge trade. But I think if there is some technical level that you're seeing that makes you want to get in, I think that's a little bit different.
Okay.
Yeah, I hope that answers your question.
Shinobi wants me to have a look at Home Depot for a swing. Now, we saw Home Depot report not that long ago, and it was a bit of a mixed bag, if you recall. They talked about, not as much money coming in from people, from the do-it-yourselfers, because, well, a lot of people did that during the pandemic. But because mortgage rates have been at 30-year highs or whatever it is, more people have been opting to stay in their home, and as a result have been choosing to do minor upgrades. So what you're seeing is the big upgrades, the ones that cost a lot of money, were already done during the pandemic. Now what they're seeing is they're seeing people upgrade again, and do-it-yourselfers are coming back, but for that smaller stuff, okay? Now, let's have a look at the daily on Home Depot. Let me put in the ticker real quick here. Now this is a swing trade. So he's looking for a swing. So now we're looking at daily levels. Well, first and foremost, you can tell that we're locked within a range here a little bit, okay? The lower end of the range is around that 270 area, give or take. These are just general areas, with the higher end of the range being near that 335, 330, 340-ish area, okay? So about, you know, let's say $70 worth of range, all right? Now, this has been taking us from some time. We've been in this range of era since about March 2022.
This is like a flat channel. This is such a flat channel.
It is,
It's
right?
textbook, yeah.
It's been sideways. You know, in March, it'll be almost 2 years that we've been sideways, obviously with peaks and troughs along the way. Is there a higher low here? Like, what I'm trying to see is, no, there isn't. I mean, well, if you want to draw from this channel, look, I think we're going to have to decisively break through that 350 in order to really start trending to the upside. But your question was a swing trade. So what I would be interested in is getting short at key levels and getting long at key levels. So the levels I identified to you were essentially that 335, 340-ish as the high. With an obvious stop, I would say you're going to have to give this at least to 350, because we did see a wick on this candle back on December 12th of last year, sorry, December 13th of last year, come into that 350 area. So it would be interesting for me to play the channel. I would play the range, the sideways channel trade until I got a decisive breakout and a close above that 350 level. That would be how I would play it. And then conversely off the bottom, if you make it down back to 280, 290-ish, 270-ish area, you're taking a long there for an upward move. That's personally how I'd play this until we've had a decisive change on the chart. Right now, to me, it looks quite consolidative.
Yeah.
Looking here at some more questions. Futuristic says, rest in peace, W buy. What happened? We kind of lost track with that bad boy. That monster that was running up earlier. Let's have a look here at the 5-minute chart, see what it is doing. Dang. That's all I can say to that is dang. That's an ugly looking chart right there. Yeah, that's how these small cap gappers live. It's a live by the sword, die by the sword kind of thing with these small cap gappers. We made a touch at 1430 and then we went unabated. Multiple down halts. Let's look at the 1 minute to get a better picture here. There you go. So we had a long, I think this was 20 minutes or so halt at that 982 area. We rocketed up. We opened up at like 12 something. Sorry, not 12 something. $13 almost. Rocketed up to 1430, and it's been 1, 2, 3, 4, 5, and now 6 down halts in a row, Adara. The tap on W buy, I'll tell you in a second, is $4. So it is lower than the closing price that we're at right now. I think we're halted. Where are we halted here? We're halted at 429 or so. So it has been a tough look for anybody who went long W buy after that initial move up. Tough.
Yeah, that reminds me of I always talk about my first small cap experience that scared me off small caps. Axla, halts to the downside, first day of trading. Thank God it was a paper trade, sad face. Yeah,
we have a few more minutes left before we send it to the big kahunas.
Yeah.
Freddie the friendly guy. I like that name, Freddie the friendly guy. I'm stuck in a swing trade on Palantir. Dollar cost average at 19.96. Jeez. I'm getting hammered in this. Should I stay or should I go now? Love you guys. Love you back, brother. Let's have a look at Palantir. You saw the Katina man involved in Palantir. I don't know if it was today. Let's look at the 15-minute chart. Yeah, let's look at the 15 here and see where we're at. All right, no, I'm going to need more because I don't see any support levels. Show me the hourly here. Okay, support. Eek. I would have been looking for some. Yeah.
I like that eek.
Well, the thing is, I'm looking for support at this level. Look at that. This was an obvious level of resistance, and then look, when we broke above it, it acted as support over here, and then it acted as support again over here.
Oh my gosh, this is a really major level.
Yeah, and then we broke it, and we broke that key level. So now the next level of support is you're looking at that 1650, 16 and a quarter area. That takes us back into September, Adara, September and late October. Pardon me. Look, it's still an uptrend though. So let's look at the daily. As you can see, clearly we're in a bit of an uptrend on PLTR with, you know, let's say the initiation part of that uptrend being at that 750, 7.25 with higher lows and higher highs. So the fact that you're in at 1996, which is literally that $20 area, you're at really near the highs. Yeah, that's I'm not gonna tell you what to do on this one, but what I can tell you is we are in an upward trend. Okay. How I would move out of this is I'd get out and I'd, you know, because I'd get out and then once it formed a higher low, I'd reinitiate my long rather than dollar cost averaging in and breaking this, say, $14 support level, which is an obvious support level here on the daily, and being in trouble. I want it to prove to me that you're going to stop either at 14 or make a higher low, maybe stop at 15.50, and then I'd reinitiate a short. I initiate a long, but that would just be the way that I look at it. Sorry that you're underwater on it, Freddie, the friendly guy. Palantir is a good stock, but you know the market trades as it does. Yeah. It is 159, Nadira. I think we have about 30 seconds left. I'm going to send it to you.
Yeah. Thank you very much for showing that example of support and resistance on Palantir. I feel like, you know, in general, I find that really helpful. But yeah, so we hopefully learned a lot about journaling today. Only 2 more days left of our trading psychology journey. But for now, we will go back to Neil and Sean in the red and black lumberjack with the hat to match, maybe. But yeah, shout out to Biggie there. But yeah, we'll see you tomorrow, same bat time, same bat channel. Brendo is at the big desk.
Hey guys, yeah, welcome in. 2 o'clock on a pretty good afternoon overall, and I'll show you why here in a second. A couple of things to be aware of. One, yields continue to plummet at this point this afternoon too. The dollar coming